Good morning everyone. So today's session will discuss about the further areas of the auditing paper. Today we'll go for the another important standard for examination, SA 240. So market is very important for examination. So regarding the fraud disclosure, the title of the standard, the auditor's responsibilities relating to fraud in an audit of financial statements. So point to be noted here is I am going to, being an auditor, it is the responsibility of the auditor relating to fraud in an audit of financial statements. So during the course of the audit, if there is any risk of material misstatements due to fraud, if there is any possibility for the fraud, then auditor is going to consider. It is not the responsibility of the auditor to find out the fraud, but it is responsibility of the auditor to consider the fraud. Now let us understand this concept very clearly. SA 240, responsibilities of the auditor relating to fraud in an audit of financial statements. So important standard for examination, SA 240. So SA 240 says, now before understanding about SA 240, we need to understand about objectives of the auditor. So in the previous class we discussed that as per SA 200, objectives of the auditor are two objectives, objective number 1, number 2, objective number 2. So number 1 is get the reasonable assurance. So get means obtain, take, receive. So all these from the management. Yes or no? The same thing we discussed in yesterday class also. Now second object of the auditor is form the opinion and report on financial statements. Sir, why you are writing this again when we discussed in the previous class? So there is one examination question repeatedly testing in the main exams. Please understand, this can be, objectives can be again classified into two further categories. One is main objectives, two is secondary objectives. Audit objectives, main objectives and secondary objectives. So main object of the auditor is to express an opinion auditor. Examination question. Main object also called as prime object or primary object. So the main object or primary object of any auditor in India is to express an opinion on financial statements. Then what is the complication here? So why you are explaining this again? Secondary object of auditor is to detect and report on frauds. Please note my words. So this is the secondary objective of auditor. Secondary object of auditor to detect or consider and report on frauds. So then what is the examination question here? Examination question as follows. Sir, when is it is the secondary object of the auditor, then whose primary object to detect the fraud is the examination question. You got the point? So when it is the secondary object of the auditor to detect and consider the fraud and report on fraud means whose primary objective? Very good. So the primary object to detect and correct frauds held with management. This is what examination question. Examination question may come like this. It is the primary object of the auditor to consider the fraud, to detect the fraud, to correct the fraud. Answer is no. It is not the primary objective of the auditor to find out the fraud. It is the primary object of the management to consider the fraud. Sir, why? What is the logic here? It is your company, your funds, your assets, your inventory. Everything is your property. You identify the fraud, you correct the fraud for the sake of the stakeholders. Where is the question of auditor will come and find out the fraud? Because auditor is not an investigator. Auditor is an individual person who obtain reasonable assurance, which means he will get the sufficient appropriate audit evidence and he will give the audit report to the appointing authority. That's what my job. Then where is the question of detecting fraud? But however, it is the secondary object of the auditor as given in standard number 240. As given in standard number 240. Now examination question here is, whose responsibility to insert control measures in the organization to prevent, to identify, to detect, to correct the frauds? Management responsibility. Because why management? Your company, you insert the controls, sir. Why auditor will come and insert the controls? If at all auditor is coming and the auditor is helping you to insert the controls, then he cannot act as a statutory auditor of the company as per section 144. What is 144? Prohibited services. You know 144 section, right? Normally when the people are there more than 5 people or 6 people, police will tell 144 section. That means restricted area, so you should not come. Exactly same meaning here also. For audit also there is 144 section. That means auditor should not do these activities if you want to act as a statutory auditor. So exactly similar lines, in the same parlance we are learning that standard number 240 given the responsibility to the auditor to consider the fraud while doing the audit of financial statements. Shall we proceed? Shall we proceed? Now let us understand about the standard. What is the fraud mean? So who are going to commit the frauds in the organization? Everything let us now understand. Now meaning of the fraud. Again they are testing so many times for, even though it is a very normal question, fraud is intentional, error is unintentional. Even though it is a normal question, many times they are testing for the examination also. Shall we proceed? Now tell me, my dear friends, we are discussing about the management fraud or auditor fraud? Management fraud. It is my responsibility now while doing the audit of financial statements to identify the management fraud as much as possible. It is not mandated to identify the fraud. Sir, you plan and identify wherever possible. We are not asking you to go and investigate in the financial statements and identify the fraud. Shall we proceed? Now let us understand the meaning of the fraud. Fraud is intentional activity. Act means it is not a statutory act. Activity by one person or more individual persons, among whom management. and also TCWG, those charged with the governance, then also employees or third parties involving the use of deception to obtain unjust or illegal advantage. You are going to get an advantage for which you are not eligible, but you are trying to get that advantage illegally in the organization. So we are going to see a lot of examples now so that you can understand the concept. Shall we proceed? Now, one line summary of entire discussion so far. Fraud is an intentional activity by how many persons? It may be by one person, it may be by two persons or more than two persons. Where they are going to commit the fraud? Within the organization. Who are going to commit the fraud? Management may commit the fraud. Very good. Top level management may commit the fraud, TCWG. Employees working in the company may commit the fraud. Third parties also can commit the fraud. In the previous class, we discussed about standard number 505, external confirmations. All third party confirmations. Now, third party also may collude with the management, or those who are working in the organization, they can commit the fraud. Sir, no sir, we want example to understand third party fraud, sir. Very simple to understand. Now, there is a company, third party. Company is going to purchase raw materials. Unit rate is rupees 50. Now, third party says, sir, you please pay me 70 rupees. I will give back 10 rupees extra. Now, third party, there actually the rate is 50 rupees. Now, third party vendor says to the company staff, you please give me order where I am going to bill you 70 rupees. I am going to bill you 70 rupees and pay me 70 rupees from your company. Actual rate is 50 rupees only. 20 rupees, I will keep 10 rupees, I will give you 10 rupees. Now, third party also committing fraud in collusion with management. Now, tell me, my dear friend, is it possible for the auditor to go in depth and identify such kind of frauds? Yes or no? It is not possible. But I will try as much as possible. I may compare the rates with the industry rates as given in standard number 520. Analysis of the data. Analytical procedures. I am going to apply my mind and do analysis. Shall we proceed? Now, in this particular meaning, the important point is third parties also can commit a fraud in collusion with management. Shall we proceed? Now, the standard says, look, Mr. Auditor, please consider the fraud in an audit. Audit of financial statements only. We are not asking you to do any extra activity here. While doing the audit, while planning for an audit of financial statement, plan for this fraud identification also. How we are going to plan? Based on PJ, professional judgment. How I am going to use the professional judgment? Based on, very good, my experience, based on my knowledge, based on my qualification, I am going to apply the professional judgment because my own judgment, right? So now tell me, my dear friends, experience of the two persons will be same or different? Now tell me, professional judgment of auditor will differ from person to person or same? Differ from person to person. So now the standard says, please take the responsibility and report on the fraud. Now where? In the financial statements. Now what kind of fraud may be there in the financial statements? Now they are given two types of frauds. As far as the financial statements are concerned, assets can be fraudulently taken by somebody. Yes or no? What kind of assets? Movable or removable? Immovable assets nobody can steal, right? If somebody want to steal something, they steal only movable property. What is the movable properties in the company? Very good. Inventory. Then movable assets like car, furniture, cash. Very good. Tools. All these can be stolen by the employees. Now, one kind of fraud is misappropriation of assets. Second kind of fraud is financial statement itself is fraudulently prepared. Right? So, fraudulent financial reporting. What are two types of frauds? Fraudulent financial reporting. Second fraud is misappropriation of assets. What kind of assets? Movable assets. Why not immovable assets? Immovable assets cannot be taken by the employees. Shall we proceed? Movable assets and fraudulent financial reporting. Now tell me, my dear friends, financial reporting is a true and fair or having material misstatement? Having material misstatement. Fraud. Now tell me, normally, who can manipulate the financial statements? Employees or top level management? Think and tell me. Tools. There are some tools. Who can take away the tools? Management or small employees? Small employees. Now tell me, financial statement should be approved by whom? Board of directors of the companies and shareholders of the companies. Yes or no? Now tell me, who can manipulate the financial statements? Top level management or bottom level management? Very good. Keep this in mind. Only top level management can manipulate the financial reporting. Examination question. Shall we proceed? Now, misappropriation of assets can be classified in two categories. So, just now we discussed misappropriation of goods, misappropriation of the cash. Defalcation of cash means misuse of the cash and take away the cash and run. Shall we proceed? Now, how the management can do this fraudulent financial reporting? Now, just now we told that who is going to commit the fraudulent financial reporting? Top level management. How they are going to commit the fraudulent financial reporting? Now, this is the answer as follows. Fraudulent financial reporting may be done by the management in the following ways. One is manipulation. What is the meaning of manipulation? Showing something wrong, which is not real. Falsification, showing some false information in the financial statements. Notes to account, you are showing false information to cheat the users of financial statements. Forgery of the documents. There is no contract at all with the company, but you are creating a contract using forged agreements, forgery. And using that agreement, you are showing some income in the financial statements, which is not real. Now tell me, my dear friends, manipulation is real, not real? Manipulation. Manipulation means original financials or modified financials? Modified. So it is a fake. Falsification means fake or real? Fake financials. Alteration, fake or real? Fake financials. So these fake financials are all these put together we are calling as fraud. When something is fake, it is a fraud. Why you are making all these fake? To cheat somebody. Management may want to cheat the bankers to get the more loan. Management may modify the financial statements to go for the further issue of share capital and for the prospectus. We should be very, very careful. Auditor should be very careful. How auditor should be very careful? Point to be noted for examination. What is the meaning of auditor should be careful means? while doing audit of financial statements. So we are discussing about the SEP 240. Auditor should be careful. Sir, what is the meaning of careful? Now let me write the answer for this particular careful. Auditor should perfectly plan audit, execute the plan in audit. Third one, very important for examination. Exercise reasonable skill and care, which means use your means auditor, knowledge and exercise professional skepticism. Very important for examination. This limb is very important for exam. What is the meaning of careful? So while doing the audit of financial statements, auditor should be very careful. Now tell me, my dear friends, based on this only all examination questions will be framed in exam. Now tell me, I perfectly planned for my exams. Let us take some other example, then come here. I perfectly planned for my exam. I perfectly executed my exam plan. I read as per the examination plan, waking up morning 5 o'clock or 4 o'clock and go as per the examination plan. I have taken all the reasonable care to prepare for my exams. Finally, I got the heavy fever. I got failed in examinations. Is it the mistake of the student? That is not a mistake of the student. Not a mistake of the student. Yes or no? Why it is not a mistake of student? Not because of the fever. It is not a mistake of the student because student has done pakka plan, student has executed the plan, student has taken all necessary steps to prepare for the exam, and finally he got the fever. Shall we proceed? Now tell me, my dear friends, answer is with you. During the audit of financial statements, auditor is pakka planned for audit. He is executed the plan with his audit team members. He exercised reasonable skill and care. Even the auditor has done all these things, there is hidden fraud in the financial statements. What fraud? Is it the responsibility of auditor to find out the hidden fraud or not? Who is responsible for this? Can you blame the auditor now? Look, Mr. Auditor, you have not identified this fraud. Hence, you are only responsible for this fraud. Later on, management found this fraud. And now management is blaming the auditor. You are waste auditor. You are not identified the fraud. Like that. Is the management contention and blaming the auditor is acceptable or not acceptable? Not acceptable. Why not acceptable? Because of three reasons. What are three reasons? Auditor has planned the financial statements, executed the plan, then auditor is exercised reasonable skill and care. Now tell me, my dear friends, auditor not exercise reasonable skill and care during the course of audit. He went to the audit without asking any questions. He completed the audit also. Then there is a hidden fraud. Later on, management found this fraud. Can management blame the auditor now? Please understand, auditor is planned. Auditor is executed the plan. But problem is, auditor is not exercise reasonable skill and care. That means he didn't ask any questions. He didn't inquire anything. He went to the company, taken the financial statements, just he has scanned the financial statements, he has signed and given the report. Later on, management found there is a fraud. Can management blame the auditor now? Can we tell that it is the mistake of the auditor now? Mistake of the auditor or not? Why it is a mistake of auditor? Because of the auditor is not exercise reasonable skill and care. Shall we proceed? Remember this for examination. All examination questions will be framed based on these three criteria. No plan. Whose mistake? Very good. Planned but not executed. Whose mistake? Auditor mistake. Planned, executed, but reasonable skill and care not exercised. Whose mistake? All is done. Planned by the auditor, executed by auditor, reasonable skill and care exercised by auditor. I have all documentation. I collected all the documents from the organization. Still fraud existed. Whose mistake? Management mistake. It is not my. I have done my reasonable steps. I have taken all necessary steps to find out the fraud, sir. But still, when the fraud is existed, I am not investigated to find out that fraud. Shall we proceed? No. We are discussing about the standard number 240 in a conceptual manner. Not just like we are not mugging up for the examination. So conceptually we are learning. Now, fraud can be committed in two ways. One is fraudulent financial reporting and misappropriation of assets. Assets can be misappropriated again in two ways: misappropriation of the goods and defalcation of the cash. How the financial statements can be misappropriated or fraudulently shown, we are discussing. Point number 1 just now completed: manipulation, falsification or forgery of documents. What is the meaning of forgery of documents? Fake documents, fake agreement copies, and you are making the other person to believe, you are making the banker to believe, sir, I have very big order, sir, 1000 crores order, give me a loan. But really there is no order at all. Shall we proceed? Second point, misrepresentation or intentional omissions. Who has done it? Management. If employee is omitted, will the management agree? They will dismiss the employee immediately. You are not doing the work properly. The management done this. Nobody can question. Now the real hero is going to enter into the picture. Auditor is going to question all these things. Why you omitted this? Shall we proceed? So second point is misrepresentation and intentional omissions. What is the meaning of misrepresentation? Giving wrong information to the users. We are going to launch so many new products in future. Please invest in our company. You are misrepresenting the public. Shall we proceed? Third one, intentional misapplication of accounting principles. Revenue versus capital classification. You are intentionally classifying revenue as a capital. Yes or no? To boost up the profits. Or else vice versa, you are intentionally treating capital expenditure as a revenue expenditure to reduce the profits. So if you do all these kinds of mistakes, we will consider it as a fraudulent financial reporting. So how many ways we can commit the fraudulent financial reporting? 3 ways. What is the first way? Manipulation, falsification or alteration of books of accounts. Second one, misrepresentation or intentional omission of the transactions in the books of accounts. Third one, intentional misapplication of the accounting principles. Who can commit this? Top level management can commit. What is the intention? To cheat, to deceive. What is the meaning of deceive? Cheating. Shall we proceed? How the management can achieve this? Just only by way of violating the internal control system of the company. If there is a strong internal control system in the company, you cannot do all these activities. But because you are a management, who has introduced the internal controls in the company? Management don't introduce the controls. Now management want to override these controls. What is the meaning of override? Violation of the controls. So management can achieve this by violating the internal controls existed in the company. Shall we proceed? No. How the management can do all these activities? What is the meaning of override of controls? Violation of controls. What are the various techniques management can follow? Examination question. What are the various techniques management can follow in order to violate these controls? Number one, recording fictitious journal entries. What is the meaning of fictitious journal entries? Fake entries they are passing in the books of accounts. Who can do all these things? Management. How? By violating internal control system. Second one, inappropriately adjusting the assumptions or changing the judgments of the management. They are creating a provision. Again, they are creating a over provision. Shall we proceed? And they are evaluating the assets, over evaluating the assets. You are doing all these adjustments finally to commit a fraud in the company. So second technique is what? Inappropriate adjusting assumptions. What is the assumptions in the companies? Provision is the assumption. Depreciation is nothing but assumption of the percentages. No. Third one, omitting or advancing, delaying recognition of the income or expenses. Omitting means 100% not recording. Advancing means excess recording. Delaying means postponing of the recording of the transactions. So instead of 31st March, if I go for 1st April, what is going to happen? Financial year is going to change. Are you able to understand? No. So this is the third technique management can follow. Omission of the transactions, advancing of the transactions, delaying of the recognition of the transactions in the books of accounts. So what is the first technique? Fictitious journal entries. Who can pass? Who can record this? Management. Second one, inappropriate adjustment of assumptions. Who can do this? Management. Omitting, advancing, delaying of the recognition of transaction. Who can do this? Management. Fourth one, concealing. That means hiding or not disclosing the real facts. Real facts. Real facts. So tell me an example, sir. You are not paid the loan taken from the bank for past 6 months. But you are not disclosed that fact in the financial statements. Not paying of the repayment of the loan to the bankers is a strength to the company or weakness to the company? Weakness to the company. But they are not disclosed the real fact. If they disclose like that, investors will go away. But what the management doing? Concealing that fact. What is the meaning of concealing? Not disclosing. Shall we proceed? Who can do this? Management. How? Override of the controls. Next, engaging in complex transactions which are not going to happen in future. You need to engage, you need to involve in the routine transactions. But you are taking up the complex transactions and you are making the people to believe that your company is going to execute all these things and your company is going to generate the profits. Finally, you are resigning the contract, cancelling the contract. Your intention is cancelling of the contract only, but you are cheating the public by entering into complex contracts. Who can do this? How? By violating the controlling system in the company. Last one, alteration of the original records. Alteration of the original records. When something is real, we call it as a true and fair use. Something you are altering, something you are altering and showing something which is not real. Showing something which is not real, showing something which is not real is called as window dressing. Window dressing. Now what is window dressing? Management is shown some amount. Example, now you tell me, let me give the example for this. Very important for examination. Fixed assets, real amount, altered amount. So fixed assets, real 100 rupees, they altered to 1000 rupees. Sales, real 70, they altered to 750. Then expenses 20, they made it as a 30. Now tell me, if the management shows like this, we call it as a true and fair view, because everything is real. When they altered something, we call it as window dressing. Why it is window dressing? Because it is altered. Because it is altered. Because it is also altered. What is the meaning of altered? It is not real. It is also not real. It is also not real. When something is not real, we call it as what? Window dressing. Will you remember for examination, friends? Shall we proceed? So what is the meaning of window dressing? Showing something which is not real is called as window dressing. Why the management want to do window dress? To cheat the public, to cheat investors, to cheat the users of financial statements. Why management will go for window dressing? Why management go for window dressing? To cheat users of financial statements. So example, investors, bankers, to get the loans, investors to get the funds by issue of capital. Are you able to understand or not? Shall we proceed? Now come back. Shall we go for next explanation? Sir, first of all, why the management or employees will commit a fraud is another examination question. Now you tell me, my dear friends, when you are going to commit a fraud in organizations. Example, all your employees working in a company, when you will commit a fraud. Anyway, you are not going to alter the books of accounts. You are going to commit only by way of misappropriation of assets only. When you are going to do that misappropriation of assets in the companies, if you are an employee, when you are going to do, I am not asking why you are going to do. When an employee will commit the fraud. Very good. When management have weak controls, I may get tempted to commit the fraud. And then because of pressure. Okay, my family is pressuring me a lot. Because you are a chartered accountant, you have to earn 1 crore per annum, whereas I am earning 10 lakhs per annum. Then immediately one day night I got the solution. Sorry, that in my company I can commit a fraud. So because of the pressure from the management or government or pressure from the higher authorities. Yes or no? Then I am working in a company as employee. I am a chartered accountant. Normally when buy the goods, that means when I purchase the goods from the suppliers, I need to make the payment. Normally will take some 30 days, 40 days like that. But the supplier is giving me offer. Sir, you make the payment to me in 20 days, I'll give 10% of the amount. Then what I will do? I'll write, because it is my power only, no? I'll write the check and immediately I'll give the payment. So what I'm going to get because of this? Shall we proceed? Now let us see why the people are going to commit the fraud in the organizations. Now see the first one. Why the management is going to commit the fraud, or why the employees are going to commit the fraud? Financial obligations or pressures. Employee may having lot of pressures. Every month he want to pay EMI amount. Every month he has lot of family expenses, but salary is not sufficient. What he will do? He will do the fraud. He will take every month some cash amount and will keep in the pocket. Next. Management unrealistic goals. It is not real goals. They want to cheat the public. Unrealistic goals. And they want to tell to the investors that we are going to do a lot of activities there, lot of activities here, and we are going to export the goods to so many countries, and we have a lot of potential customers, and next 5 years we are the #1 company in the world. Like that they are putting a lot of goals. To achieve that goal, they are altering the records and passing of the fictitious entries and all. Shall we proceed? What is second reason people are committing fraud? Unrealistic goals. What is the first one? Financial pressures. Then third one, dissatisfied employees or lack of motivation among employees. Sir, you are giving every month only 10,000 salary to me for past 5 years. I requested many times, you are not increasing my salary. What employee will do now? He will misappropriate the goods. He will take some goods and will sell in the market and take the money. Because you are a trusted employee, for past 5 years you are in my company, means you are a trusted employee, but you are doing what? Fraud. Why you are committing a fraud? Because you are dissatisfied with my salary and you are having no motivation. If I give bonus, you may get motivation. If I give festival bonus, you may get motivation. If I give some medical expenses, you may get motivation, but I am not giving any amount to you. Because of this, you don't have motivation, but you got an opportunity to commit a fraud. Shall we proceed? Name game. Very simple. Example, there is a company which is run by politician. Now politician's son will come to the company, he will tell that company belongs to me. Do whatever I say, because it's my company. Even the listed company, it is my company. You are using the power. And using this name game, management use the power and authority and asking the employees to do some illegal activities. Go to the bank, withdraw the check, 5 crore rupees. Or I will give the subcontract to an employee. I will create a fake agreement on the employee as if he supplied some services to me. Goods means you have to generate EVA bill and all, you will be catched in the GST department. Service means no one will catch. So you listen whatever I say. You are my employee for past 10 years. You do one thing. I will create a fake agreement in your name. You sign the agreement, give it to me. Because I am the ultimate authority in the company, it is my company. So immediately I will transfer 5 crore rupees to you. You please go to the bank and withdraw the check and give the amount back to me. What employee will do now? Okay sir, no problem sir. I will do sir. I will file all your income tax returns also. I will file all your TDS, whatever the refund is amount is there, I will give the refund amount to you. Maybe 10% or 2%, whatever it is. Now what employee will do? Anyway, I am going to get some TDS amount. My boss is going to file all my returns. I no need to pay an auditor fees. Ultimately, I am going to do some activity for my boss. Otherwise, my job may be lost. So because of this, people may commit the fraud. 4. 5. Opportunity to commit the fraud because there is no controls in the company. When the opportunity will come when no controls. So these are the 5 reasons why people commit a fraud. What are the 5 reasons? Financial obligations or financial pressures, unrealistic goals, Then dissatisfied employees or lack of motivation among employees. Fourth one, misuse of the power. Fifth one, opportunity to commit the fraud. Easy or difficult? Shall we proceed? No. Employee fraud, we give an example. Now tell me, my dear friends, tell me, examination question, who can commit the fraud? Management can commit the fraud, employees also can commit the fraud. Now auditor is planned for audit of financial statements of the company. He went to the audit. Whose fraud can be easily identified by the auditor? Management fraud can be identified easily. Employment fraud can be identified easier. Employee fraud can be identified easier. Management fraud can be identified easy. Why employee fraud can be identified by easy? Employees don't have any controls to hide this fraud, but management can alter the records, everything, and they can hide the fraud. So examination question. Which fraud can be easily identified by the auditor? Employee fraud can be easily identified by the auditor compared with whose fraud? Management fraud. Now let us see employee fraud example. So Vineet is a manager in ZX Limited company. He is having authority to sign the checks up to 10,000 rupees. So what is the maximum authority the person can sign? Only 10,000. Shall we proceed? Good. So there is one manager in the company name called Vineet. He is having the authority to sign the checks up to 10,000 rupees. While performing the audit, Rajan, who is an auditor, noticed that there were many checks with the amount of 999. Because he signed how many checks? So many checks he has signed. Because maximum amount is how much? 10,000 only. So what he has done? He has put all the check amount 9999. He has signed 100 checks like that. Now what is done? Auditor has noticed this point. Why 100 checks with the same amount? Then which has been signed by the manager called Vineet. Further, Vineet has split the large payments more than 10,000 each into 2 or more checks less than 10,000 so that he may authorize the payments. Because what is his authority? 10,000. If 20,000 comes, what he will do? He will make 2 checks. If 50,000 comes, what he will do? He will make 5 checks. 1 lakh comes, what he will do? He will make 10 checks. Because maximum amount is per check 10,000. So when there is the less than 10,000 rupees or more checks in the company, auditor got a doubt. Now what is going to happen? This raised the suspicion in the mind of auditor. This is called as possibility of fraud. What is that? Possibility of fraud. Why possibility of fraud? Because I noticed there is a chance for committing a fraud in the company. Shall we proceed? No. The auditor found that checks of 9999 were deposited in Vineet's personal account. Manager has deposited all the checks in the personal account of the manager and misappropriate the amount. This is called as employee fraud. Because he is employee in the company, management has given him the authority to authorize the check up to 10,000 rupees, but he has misappropriated so many checks like that. What he has done? He has not only authorized the check is deposited in the personal account and amount is taken and used for the personal purpose. So this is called as employee fraud. Easy to identify, difficult to identify. Why it is easy to identify by auditor? Because so many checks with less than 10,000 rupees. Yes or no? Now examination questions. Listen very carefully and answer. Okay, we already discussed about all the facts. Very easy questions for examination. Only attentiveness is required here. Now, reading the question in the auditing exam is an art. Understanding is secondary. First, reading the question itself is an art. Now, let us read the question. While auditing the XYZ Limited company, that means during the course of audit, yes or no? During the course of audit, the auditor was told by Mr. Mahesh, the CEO of the company, that he would be responsible for the fraud and errors, if any, in the books of accounts of the company. What is done? Mr. Mahesh, the CEO of the company, told to the auditor, sir, any fraud and error in the organization, I am only responsible, so don't look into the frauds and errors. Okay. Now, what auditor has to do? You should comment on this particular sentence. Management has voluntarily come and surrendered. Now, what auditor has to do? Can he ignore the frauds and errors, or he has to consider? Consider the frauds. Because of what? SA 240 standard. Now, let us see the answer. As per SA 240, the auditor responsibility in fraud in audit of financial statements are as follows. In yesterday class, we have discussed about the so many points. The same points repeated here. Auditor is responsible for what assurance? I wrote the point. Due to inherent limitation, what is not possible? Always there is the audit risk. But audit risk cannot be reduced to 0. That is called as unavoidable risk. Maintaining an attitude of professional skepticism is required when? Throughout the audit. All are exam questions. MCQ based question. Individually they may ask, but SA 240 they given all the points and they given the conclusion. Fourth one. Auditor should also consider implication of the frauds and errors or not consider? He should consider or should not consider? He should consider the implications of the errors and frauds in audit of financial statements. In case of fraud, the same should be disclosed in the financial statements by the company. If any errors are there, any frauds are there, which is already noticed by the management, management has to disclose. Sir, management not disclosed, sir. Fact known to the auditor now. What auditor has to do? You disclose in your report. When the management failed to disclose, you disclose in your report. That's what next point. If adequate disclosure not made by the management, there should be suitable disclosed in the audit report. Based on these points, I wanted to conclude the particular case study. The CEO vote should not be accepted by auditor. Why? Sir, whether you accept or don't accept, I have to do my job, sir. Let me find out the frauds first. Then we will discuss later on. Okay. Merely because you told that I am not responsible for all frauds and errors, I can't say I cannot disclose in my report. I will disclose in my report. Then you give the reply whatever you wanted to give to the management. Shall we proceed? So the conclusion is the CEO vote should not be accepted by auditor. Auditor has to do auditor job. Question number 2. Very, very, very important for examination. Shall we proceed? Sir, after what? After. That means what? Audit is completed. After the completion of the statutory audit of AVS Limited company, a fraud was detected. That means what? After audit is over, later on fraud is found by management at the office of the client place. The management of the company argued that there is a failure on the part of the auditor to detect the fraud, and now the auditor would be responsible for not detecting the fraud in the company. Audit is completed, not completed? Completed. After audit is completed, what has happened in the company? Fraud is identified by management. Now what management is doing? They are blaming the auditor. can they blame the auditor? Answer is yes, answer is no. Yes, they can blame the auditor when? No plan, no execution, no reasonable skill and care. They cannot blame the auditor when? When there is a plan, there is execution, there is reasonable skill and care exercised by auditor, there is a documentation maintained by the auditor. Shall we proceed? Now what is your answer for this case? Merely because you have found out the fraud, directly you cannot blame the auditor. First you have to check whether auditors have all the working papers or not. Whether auditor have the reasonable skill and care exercised in the course of audit or not, you have to check. Shall we proceed? Now let us see the answer. So write whatever given in the question number 1, same answer and continuation of the answer. The liability of the auditor for failure to detect the fraud existed only when such failure is clearly due to not, you have to highlight in the examination, not with the highlighter, double quotation, double underline, to get the attention of the paper evaluator. So this is the logic to score the marks in auditing paper. Shall we proceed? So in the given case, after completion of the audit, if the fraud has been detected, the same by itself cannot mean that auditor did not perform the audit properly. It doesn't mean auditor is not done the work properly. You have to prove it. Who has to prove? Management has to prove. What management has to prove? Auditor is not exercise reasonable skill and care. You prove. Auditor does not maintain documentation. You prove it. Then auditor is liable for the fraud. He has to take the responsibility for the fraud. Then accordingly, whatever the consequences given in the Companies Act, auditor is going to face. But merely because fraud is not found out, it is not the mistake of the auditor. Provided what? Reasonable skill and care is exercised by auditor. Shall we proceed? Next question number 3. During the statutory audit, that means audit is going on. Its auditor, Mr. Bajaj, the engagement partner of the Bajaj Chopra and Associates, encounters some exceptional circumstances that bring into the question his ability to continue to perform the audit while suspecting a fraud arising from material misstatements. So during the course of audit, he got some doubts about the financial statements. Then he is really shocked about the fraud is whatever happened in the company. Now he is having a doubt whether can I continue my audit or cannot continue my audit. If he is able to continue, what he has to do? Report the fraud. But he is having an intimidation threat also. What is intimidation threat? What is intimidation threat means? Coercion of the auditor, blackmailing the auditor, threatening the auditor, kidnapping the auditor. But the question says he is having a doubt about the ability to continue. Now what he has to do now? Only 2 options. Either go straight forward and give the report, or come back, withdraw and come back. Shall we proceed? No, answer is report or withdraw from the engagement. So are you able to appreciate or not? Shall we proceed? So question number 4 is again repetitive question. Another MCQ based question for exam. What are the fraud risk factors? Fraud risk factors. Only 3 fraud risk factors. Incentives and pressures. If I give anybody give incentive or pressure or to me, I will commit a fraud. Yes or no? If top level management pressurize the top below, that means bottom level employees, they will commit the fraud. If they give incentives, they will commit the fraud. Whenever there is opportunity, I will commit the fraud. Second risk factor. Third one, attitude and rationalization, use of power. People commit the fraud. So 3 risk factors. What are 3 risk factors? Pressure and incentives, Opportunities, attitude or rationalization, that means misuse of the power. No. So next important question for examination, last question, fraud reporting. Fraud reporting. Fraud reporting. Shall we proceed? So fraud reporting, very easy to remember. Remember the amount 1 crore, 1 crore and above. It is less than 1 crore. Greater than is equal to 1 crore. Please have the symbols. It is less than 1 crore. It is greater than is equal to 1 crore. Okay, sir, why you are focusing more on that symbol means 2-3 exams back they given exactly 1 crore amount. Now the background story of this particular chart is, during the course of the audit, if auditor found out the fraud, who found out the fraud? Auditor found. To whom you should report is the question. To whom you should report. If the fraud amount is less than 1 crore, that means 99,99,999. Okay, so let me write here. Correct. During the course of the audit, if the auditor found out a fraud amount less than 1 crore, report to the board of directors. To whom? Board of directors. What you should report? So what you may be found out in the fraud? What you might be found out in the fraud? Very good. Amount may be found out. Then type of fraud may be found out, whether it is assets misappropriation or falsification of records. Then who can commit the fraud in the companies? Management or employees. Parties can be found out. What you should tell to the management now? You have to give the intimation of the fraud to the board of directors immediately about 3 areas. What are 3 areas? Now let me check. So if the fraud amount is less than 1 crore, report to the board or audit committee in the company within 2 days of the knowledge. Examination question, MCQ based question, true or false questions. Within 2 days. Example, I found out the fraud today. When I should report? Tomorrow and day after tomorrow. Within 2 days I have to report. To whom I should report in case of less than 1 crore? Board of directors or audit committee. What I should report? 3 areas. What are 3 areas? Nature of fraud, amount of fraud, parties involved in the fraud. Please highlight these 3 points. Nature of fraud, amount of fraud, parties. So parties might be what? Management or employees. What is the nature of fraud? Financial reporting fraud and misappropriation of assets fraud. Make sense? Shall we proceed? If the fraud amount is 1 crore and above, who found out the fraud? Auditor found out the fraud. When? During the course of the audit. If it is 1 crore and above, what you should do? Please inform to the central government in the following manner. To whom you should inform? Central government. When you should inform the central government? Fraud amount is 1 crore or more. If it is less than 1 crore, only board. If 1 crore and above, central government you should inform in the following manner. What is the manner? Procedure. What is the procedure? So manner means procedure. What is the procedure? Within 2 days of the knowledge, report to the board or audit committee. Within 2 days of the knowledge, same point repeated. In case of less than 1 crore also same point only. Within 2 days of the knowledge, report to the board or audit committee. What you are going to report? 3 areas. What is 3 areas? Nature of fraud, amount of fraud, and parties involved in the fraud. And ask the board to reply within 45 days. Because I have to further reply to whom? Central government. So hence ask the management, ask the board of directors to report and reply back to the auditor within how many days? 45 days. What management or board of directors has to give reply? What kind of action you have taken on that fraud? Give me a reply. I will report the same to the central government now. Now let us check. Reply or observation received within time. Who has given the reply to me? Who has given reply to auditor? Board has given reply to auditor. Within how many days? 45 days. Examination question. Within how many days? 45 days. To whom they should give reply? Auditor. Now, auditor is having what within his hands. I have already 3 areas in my hand. What are 3 areas? Nature of fraud, amount of fraud, parties involved in the fraud already I have. And within 45 days I got one more report. What is that report? Reply from the board of directors. Or 4, please forward to central government. Yes or no? No, this what? Forward the report, reply, observations, comments to central government within 15 days of reply. One more examination question. Within how many days auditor has to send this report to the central government? 15 days. When I have to calculate this 15 days? From the date of receipt from the board, I have to calculate 15 days, not after 45 days. If the management is given within 30 days, what I should do? Immediately after 15 days. If the management has given reply within 5 days, plus 15 days. If management is given reply exactly on 45th day, plus 15 days. Shall we proceed? If the board is not given reply to auditor, board is not given reply to, within how many days? 45 days. Board is not given reply to auditor within how many days? 45 days. Then what auditor has to do? Still you have to report to the central government. What you should report? Reply or observation not received within the 45 days time. Then forward the report, whatever you have already. That means nature of fraud, amount of the fraud, parties involved in the fraud. Write a note. Write a note containing details of the report for which failed to receive reply and observations. So for what the management does not give reply, please write in detail note and forward to central government. When I should forward this report? After 45 days only. Why? Because anyway I am waiting up to 45 days. After 45 days only I came to know that I have not received the reply. Yes or no? Can auditor forward this report before 45 days? No. Why no? Because the board has given an opportunity to give reply within 45 days. Before 45 days, the auditor cannot send this report to central government. He has to wait till 45 days. Shall we proceed? So let us summarize once. So fraud amount should be segregated in how many parts? 2 parts. Less than 1 crore, 1 crore and above. Less than 1 crore means to whom I should report? Board or audit committee, whatever is there in the company. What I should report? 3 areas. What are 3 areas? Nature of fraud, amount of fraud, parties involved in. Within how many days I should report? 2 days I should report. 2 days I should report. Okay. If the fraud amount is 1 crore, exactly 1 crore and above, to whom I should report? Central government. But before reporting central government, they given a procedure. What is the procedure? Within 2 days, give it to the board or audit committee and ask them to give a reply within 45 days. And once you got the reply, you forward the reply plus your report to the central government. Within how many days? 15 days. If reply not received within 45 days, you forward the report along with a note. That's all about the fraud reporting as far as the 240 is concerned. Section number 143. Very easy to remember for examination. Fraud means 143, I love you section is a fraud. Points to be noted for examination. Very, very important points to be noted for examination. This I love you section 143 subsection 12 rule number 13 applicable to company secretaries and cost accountants also. Applicable to company secretaries and cost accountant also. That's what the first point. Examination question may come. Section 143 subsection 12 rule number 13 fraud reporting applicable only to statutory auditor of the company. Answer is false. Why false? This section applicable to company secretary and cost auditor also, not only to the statutory auditor. What is the meaning of it? Before the statutory audit is going on or going to commence, if already cost auditor is already completed the cost audit, he found out the fraud, same fraud auditor need not to report. Because somebody fraud, I don't need to report. If something I found, I should report in the above manner given. Shall we proceed? Now, point number 2. If anybody is violated this reporting concept, what is reporting concept? Within 2 days, within 45 days reply, within 15 days, if anybody violated this concept, examination question. If any auditor or cost accountant or company secretary does not comply, that means violated the provisions, they shall be liable to a penalty of 5 lakh on case of listed company, 1 lakh in case of other companies. Very, very important for examination. Listed company means how much? 5 lakhs. Other company means how much? 1 lakh. Who has to pay? Whoever failed to report, they have to pay this amount. Shall we proceed? No. Point number 3, examination case study question. Point number 3, examination case study questions. If a suspected offence of fraud has already has been reported under this section by other persons like cost accounting company secretary, who has to comply with this section? Chartered accountant has to comply, cost accountant has to comply, company secretary has to comply. Yes or no? Yes. If already cost accountant or company secretary has reported this fraud to the board or central government, whatever it may be, if something already done, auditor need not report. This is what the practical question given in examination. If already reported, he need not report the same. Why? It is already reported by somebody. Why you want to repeat the same fraud? Since it is not per se identified and suspected fraud by the auditor. So with the SEP 240 is over, including practical questions, including case studies, risk factors. We are covering complete chapter because without this there is no question paper. They will definitely ask question from this particular concept. They may ask the meaning of the fraud. They may ask whether third parties can commit the fraud. They may ask about the fraud risk factors. They may ask about the opportunities to commit a fraud. They may ask about who can commit a fraud. They may ask about types of the fraudulent reporting. They may ask about the misappropriation of the goods or misappropriation of the cash. Like that, they may ask anything in examination. And they may ask about this 1 crore and 99 lakhs 99,999 rupees also. So we'll take a small break for 10 minutes and we'll continue the class. Let us continue with the another area of discussion, internal audit. So practical questions may come for examination from this particular area, page number 29, internal audit. So most of the times they are checking applicability of internal audit concept, whether the internal audit is applicable mandatorily or not. So again, it is not a statutory audit, it is only internal audit, my dear friends. But internal auditor, they have to get by any other person as per so and so section. Shall we proceed? Now the concept says, internal audit concept says, so I will highlight wherever the points are important for examination as well as for the MCQ based questions. So section 138 not important for examination, section number is not important. Of the Companies Act 2013, following class of companies shall mandatorily required to appoint an internal auditor or a firm of internal auditors for the following companies. Shall we proceed? Now the section says, section 138 says, following class of companies shall appoint an internal auditor. What are the companies? Every listed company in India. For every listed company, internal audit is mandatory. Second one, every unlisted public company, every unlisted public company is subject to following 4 conditions. How many conditions? 4 conditions. Now please remember, my dear friends, whenever conditions given in the law paper, auditing paper, they will give conditions only from the following areas: profit and loss account, turnover condition, balance sheet, capital condition, borrowings condition, deposits condition. Almost all areas applicability can be given only from these areas. Majority of the sections, profit and loss account, they may ask about turnover condition, balance sheet about capital or borrowings or deposits. Shall we proceed? Now the first condition for the unlisted companies, for all listed companies without any conditions, internal audit is mandatory. For unlisted public companies, internal audit is mandatory subject to following 4 conditions. 4 conditions come from where? Very easy to remember for examination. Profit and loss account, 1 condition. What is the condition? Turnover condition. Balance sheet, how many conditions? 3 conditions. What is 3 conditions in the balance sheet? Paid up capital, borrowings, deposits condition. Shall we proceed? Now they said paid up share capital 50 crores or more. That means greater than or is equal to 50 crores. It is 50, not 5, it is 50 crores. Typo error is there, 50 crore rupees. Vinaya, shall I proceed? Second condition is turnover condition. Turnover condition says 200 crore rupees or more during the previous financial year. So all condition talks about only previous financial year. Previous financial year. So second condition, turnover condition, turnover greater than or is equal to 200 crores, then internal audit is mandatory. Third condition, outstanding loans or borrowings from bank or public financial institutions exceeding 100 crore rupees or more at any point of time during the financial year. What is the meaning of any point of time? 365 days I have to check. How many days? All 365 days I have to check At any point of time in 365 days, if the outstanding loans or borrowings is more than 100 crore rupees, then internal audit is mandatory. Fourth condition, deposits of 25 crores or more at any point of time during the preceding financial year is 25 crores or more. So tell me how to easily remember examination. Double, 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 double. 25, here it is 50, 100, 200. Okay. So let us take first one. Deposits 25, paid up capital 50, loans 100, turnover 200. Easy or difficult? Easy. Now regarding the private companies. So for the private companies, every private company, if the following two conditions are met, then internal audit is mandatory. One is turnover condition 200 crores, loans condition 100 crores. Why capital condition is not given? Why deposit condition not given? Because it is a private company cannot go for deposits. Because it is a private company cannot go for public capital. Hence two conditions removed here. Okay. Shall we? It is provided that an existing company covered under any of the above criteria shall comply with the requirement within 6 months of the commencement of such section. It is not mandatory now because it is earlier section. Anyway, they may test for examination. At the time of inserting the section, if they got these criteria, then within 6 months company has to go for appointment of the internal auditors. Now let us go for the questions. Before going for the questions, let me give the some other information regarding this particular concept for examination. Internal auditors. Okay. Internal auditor may be CA, CMA, CS, MCOM graduate, MBA graduate, anybody. But statutory auditor must be CA, qualified chartered accountant. Internal auditor may be any graduate as decided by the board of directors, not by the shareholders. As decided by board of directors. Question may come in the examination. Shareholders are appointed internal auditor appointment is invalid. Who has to appoint internal auditors? Board has to appoint internal auditors. Who may be internal auditor? Any graduate may be internal auditor as decided by whom? Board of directors. This is what examination question. Now let us go for the questions. Question number 1. Windy Limited is an unlisted public company. Unlisted public company, how many conditions? 4 conditions. Private limited company, how many conditions? 2 conditions. Listed company, how many conditions? Without any conditions, straight away internal audit applicable to all listed companies. Okay, now we are discussing about first question about what company? Unlisted or listed? How many conditions? 4 conditions. How many doubles? 25, 50, 100, 200. Shall we? Good. So during the financial year 2021, the paid up share capital of the company 60 crores. What is the limit given? 50 crores. Already one condition is violated. During the financial year 21-22, the board of directors of the company, in order to comply with the provisions of the Companies Act, appointed internal auditor. What board has done? Sir, anyway 50 crore rupees has crossed. It is more than 50 crores. Board has taken a decision to appoint internal auditor. Is the appointment valid or invalid? That's what the answer. Now they are asking you to give justification of this appointment done by the board of Indy Company Limited as per the provisions of the Companies Act 2013. What you have to write? You have to write all 3 points. As per section 138 of the Companies Act, internal audit is mandatory for the following companies. Every listed company mandatory, every unlisted public company 4 conditions, private company 2 conditions. According to the above provisions, in the given case, appointment of internal auditor by board is tenable and acceptable and valid. Shall we proceed? Very good. Now the answer is justified. Why justified? Because a valid appointment. Question number 2. Extremely fine limited company is unlisted public company. Again unlisted public company. How many conditions? 4 conditions. What is the limit? 25, 100, 25, 50, 100, 200. The turnover of the above mentioned company was 250 crores. More than 200 crores or less than 200 crores? More than 200 crores. Audit applicable, not applicable? Internal auditors to be appointed by whom? Board of Directors. In order to comply with the provisions of the Companies Act 2013, Board of Directors of the company during the financial year appointed internal auditor. Comment on the appointment of internal auditor. Justified, not justified? According to which section? 138. Justified. Why justified? Anyway, more than 200 crores. Mandatory they have to appoint internal auditor, they have appointed the internal auditor. Shall we proceed? Question number 3. Private limited company, how many conditions? Only 2 conditions. Why not 4 conditions? No share capital in case of private limited company, because share capital belongs to the only promoters of the company. They cannot go for public issue. Then deposits, private limited company cannot go for deposits also. Hence 2 conditions removed for private limited companies. Only 2 conditions available. What is 2 conditions? Loans and turnover. Shall we proceed? Sweet Fruits Private Limited Company had a turnover of 155 crores during the financial year 1920. Explain whether during the financial year 2021 previous year turnover is 155 crores. Next year they are checking the condition. Sweet Fruit Private Limited Company would be required or not required to appoint internal auditor, keeping the provisions of the section 138 of the Companies Act 2013. So turnover is how much? 155 crores. When we have to appoint internal auditor? When turnover is more than or is equal to 200 crores. Now it is less than 200 crores. Hence, company is not required to appoint internal auditor. Okay. Now let us see the answer. Will not be required to appoint internal auditor. Why? Very good. They given 155 crores less than the limit. Question number 4. Unlisted public company. In case of internal auditor, unlisted public company, how many conditions? 4 conditions. Let us see. Care Limited is the unlisted public company. During the financial year 1920, the paid up share capital of the share company is 50 crores. Exactly 50 crores. Paid up, paid up, paid up. And the turnover of the company is exactly 80 crores. During the financial year 2021, Board of Directors of the company appointed internal auditors. Whether Care Limited is required to appoint internal auditors, please check. Why? Greater than or is equal to 50 crores. All conditions equal, 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 equal. Come and see the provision. We have seen what? Greater than or is equal to, greater than or is equal to, greater than or is equal to, greater than or is equal to. Like this, they are going to test in examination. Exactly, they are going to give the amount. Now, exactly they given how much? 50 crores. So, in case of unlisted company, 50 crores means internal auditor is mandatory, not mandatory. Mandatory. In the given case, 50 crores, exactly they given 50 crores, hence internal audit mandatory. But turnover is less than 200. Second condition is not satisfied. First condition is satisfied. Exactly equal to 50 crores. Any one condition violated, internal audit is mandatory. In the given case, they are given two conditions, one condition satisfied, other condition not satisfied. Hence, they have to appoint internal auditor. So, the answer is yes. But you should not write like this answer in the examination. You have to write the provisions as per 138 and you have to give the conclusion. Okay. So, here answer is write all the provisions as per 138, then you should conclude. With this, internal audit concept is over. May be tested for examination, may be tested for examination. Please be clear. Please be clear. Next, 570. Going concern concept. Let's say 570. Going concern assumption. Now, let me give the background of the standard first. As far as this standard is concerned, auditor is required to report on going concern of the organization for which he is doing audit. Now, let me give the background of the concept. Now, there is a company. Now, the auditor should tell whether this company run or likely to close or about to shut down, close or wind up. Run means future. What auditor has to report? Whether this company is going to run in future or whether this company is going to likely to close or wind up or this company is going to about to shut down temporarily. Standard number 570. So, auditor should report on the company's going concern assumption. Shall we proceed? Now, 570 has given conditions for checking of this particular going concern conditions. So, the conditions can be classified into three categories. Operating activities, investing activities, financing activities. So, also called as other activities. So, operating, financing, other activities. Who has to test these conditions? Test by auditor. When? During audit. When to test these conditions? During audit. After testing, what auditor has to do? During audit, test and report. What auditor should test? Test about going concern, right? Test about going concern and report about going concern. Shall we proceed? Now 570 standard says auditor should test the conditions and auditor should express whether company will run in future, or company is going to likely to close or wind up in future, or company is going to shut down temporarily. In order to express this status of the company, 570 is given how many conditions? 3 different types of conditions: operating activity conditions or operational conditions, other conditions, financing conditions. Now after testing of the conditions, auditor can come to a conclusion. What conclusion? Whether run the company in future, or likely to close the company, or about to shut down the company. Shall we proceed? Now what we need to learn now? Conditions we have to learn. Shall we proceed? Now let us understand the conditions. Operating conditions. Operating conditions. So operating condition talks about day-to-day activities of the company. Day-to-day activities of the company. That means operations of the company. Now who has to test these operations? Who has to test these operations? Very good. Auditor has to test these operations. Test. Now what might be the conditions? Operating conditions may be as follows. Shall we proceed? Decrease in sales continuously. Now tell me, my dear friends, when the company is continuously decreasing sales, how I am going to report about the company? Likely to be closed in future. I cannot say company is going to run in future because sales is not there for past 4 quarters. This quarter of sales is not there. That means company has not taken any control measures to increase the sales. Company has not taken any control measures to increase the sales. Continuously sales is being decreased. Now once auditor tested, yes, there is a damage to the going concern, I am going to tell the company is not going to run on going concern basis in future. No. Loss of key customers. Company lost the key customers. Major customers company have been lost. So when one customer is lost, what company has to do? Immediately build up the some other customers to run the business, but company has not done. What auditor has to report? Damage to going concern. Loss of suppliers. Suppliers are continuously supplying the goods. Now they stop supplying the goods to the company. What company has to do? Immediately they have to go for some other supplier, but company has not gone. That means how I can understand about this? Company is going to close in future. Because when your supplier is not supplying the goods, you have to run for the suppliers and you have to get the business and you have to run the business, but you are not doing anything. Loss of management. Loss of key management. One key employee has resigned for the job. Example, CFO of the company resigned. What company has to do? Recruit another CFO. But you have not done the same, which means I don't trust your company. These are the conditions given in 570. What auditor has to do now? Test 1, 2, 3, 4 conditions and give a report. About what? Going concern of the company. What auditor has to report? Whether company is going to run in future, likely to be closed in future, or temporarily going to close in future. If I tell report about the company regarding going concern, who is going to be alert? Users of the financial statements may be very, very alert. Ayyo, for this company I have given a lot of loan. For this company I have given a lot of credit. I want to go to the company, I want to sell the company assets, I want to get my money back. So that is the reason, as far as this standard is concerned, it is responsible to the auditor to talk about the going concern. In his audit report also, he has to tell whether the company is running on going concern basis or not. Shall we proceed? Financing activities. Sorry. Financing activities. Who has to test? Auditor has to test. Now let us see point number 1. Non-payment of bank loans. How to understand this point? Company has availed a loan facility but not paid loan. Company has not paid EMI. When company is not paying EMI continuously, how to understand about this? Company is going to close over the night. Non-payment of salaries to staff. Yeah. Hard working employees. You are not making payment to salaries also. You have seen so many companies where they have not paid the salaries also, and they came onto the roads and they do strike. So because of those reasons, the standard is when introduced by the ICAI. So when the company is not making any payment of salary, auditor can check. Finance. Replacement of employees is operational. Finance related is salary, money related activities. Third one, non-payment of dividend. Hard earned money is invested by shareholders, but you are not paid dividend at any point of time during the course of company. Why? You have to give justification, right? I want to accumulate the fund, I want to take into the reserves, and I want to invest in future. You have to give justification. Otherwise, I will assume that you are going to close the company in future. So non-payment of the bank loans, salaries, dividend, then taxes. You are not paid tax for continuously for 9 months. After 1 year only, I can understand that you are going to pay all income tax, advance tax, everything. Quarterly, you have to remit the advance tax, right? You are not remitted quarter 1, you are not remitted quarter 2, you are not remitted quarter 3, you are not remitted quarter 4. How to understand this? What is the problem? Non-payment of dues to suppliers. Suppliers supply the goods on credit basis. Okay, but you are not making payment to supplier. Consequently, what happens? Supplier is going to stop the further supply. That means you are going to lose the supply now. Supplier is going to file a case against you. Litigations and claims. So if auditor is testing all these things, if all are favorable points, auditor will tell company is going to run on going concern basis. If all are negative points, auditor will tell company is not likely to going to run in future. Shall we proceed? Other factors. Other factors. Other factors. Example, political factors. If your company is based on political parties, ruling party, once government is gone, you are not in ruling now, you are in opposition. What is going to happen? You are not going to get any contracts. Going concern will be affected or not? Affected. Second one, environmental factors. Example, government is now taking initiative steps going for the electric vehicles. What is happening? When you are going for electric vehicle, automatically company has to come to electric vehicles instead of diesel and petrol. Still company has not taken any steps for electric vehicle, still you are in diesel and petrol only. That means how to understand about your psychology and company's objectives. I am not interested to come to electric vehicle, I will close the company. Any other factors based on the professional judgment of auditor. Based on the experience of auditor, if auditor comes to know that the following factors may be a dangerous factors. The following factors may be a dangerous factors, so that other factors can be any other factors as may be decided by the auditor from time to time. Shall we proceed? Who has to test the going concern concept? Auditor should test. After testing, what auditor has to do? Report. About what auditor has to report? Going concern of the company. What auditor has to report? Whether company is going to run in future or not going to run in future. How to report after testing? How many operations auditor has to test? Three kinds of activities. What is the kind of activities? Operating activities, financing activities, other operating activities, or investing activities. Now come to the examination questions. ANS associates are the chartered accountants appointed as a statutory auditors of the MNO limited company. The company has been suffering losses due to emergence of highly successful competitors. When the competitor is entering into market, you have to change your strategies, right? But company is continuously making losses because of the competitor. Swiggy first or Zomato first? Swiggy first or Zomato first? Not in listing, in the market. Swiggy first. All of you know about Swiggy first. You want to install all Swiggy apps. Then Zomato app. Right? When Swiggy came into the existence and they incorporated the e-commerce transactions, Zomato entering into market, Swiggy business is not damaged. Even though highly successful competitor is entering into the market like Zomato, Swiggy business is not disturbed. Maybe disturbed, but they have recovered. But Zomato is one step ahead, they have gone and they have listed in the stock market also. Swiggy now coming into IPO. Slowly they are announced that we are going for IPO. Now when the competitor is coming, you need to change your strategies. But in the given case, company is suffering losses due to emergence of highly successful competitors, thereby leading a negative net worth. No sales, no income, no net worth. Also, sales head of the company left the organization due to health issue. When the employee left, what company has to do? Replace and recruit another employee, and you have to keep a strong person in this place. When the Amar, the engaging partner, discussed the scenario with the management of the company, he did not get any satisfactory reply. Amar is the auditor who is testing all the points. Sir, why employee left, sir? Why you are not recruited, sir? Management has given reply, auditor not satisfied. Then, sir, why you are making losses? Management replied, due to competitors. Even though why competitor is coming, why you are not able to continue the business? Management is given some level of information, but auditor not satisfied. When auditor not satisfied means what? There is a damage to going concern. Employee left, you are not recruited. You are making continuous losses, you are not taking any strategies, you are not prepared SWOT analysis also. That means how auditor is going to now do? I am going to report that company is going to close. Shall we proceed? Now from the management, what is the responsibility of auditor now with regard to SEP'24? Auditor has to report about possibility of the going concern assumption. In this particular scenario, due to the two factors, one factor is operational activity, that is replacement of the employee, not done. Other factor is about another operational activity where there is a highly successful competitors, you are not taking any steps. So auditor may discuss with the management and they may discuss with the TCWG, those charged with the governance. The auditor did not get the satisfactory reply, hence auditor can report about the going concern assumption in the audit report. So that who will be alert? Users of the financial statements will be very alert now. Whoever given loan to MNO company, they will come and collect now. Because sir, we don't believe you, sir. Auditor has already given a negative comment about your company. Shall we? Now the answer is given. So financial indicator is given, negative net worth. Operating indicator is given, loss of key management. So in the present case, has negative net worth of the company due to the highly successful competitor, and sales head of the company also left the company. Also, Amma did not get any satisfactory reply, and auditor has to report about the fact about the it is not going to run on going concern basis. If the management of MNO Limited uses the going concern basis accounting, the auditor should first ask the management to adjust the above transactions in the books of accounts, and they have to disclose this fact in the financial statements, notes to accounts. But management has not done. So if the management does not agree for the disclosure in the financial statements, auditor should go for 705 modified report. If the management already disclosed this fact in the financial statements, then everybody knows about that. Management is not doing well, management is not recruited the key management and all. But when the management is not disclosed in the notes to accounts, auditor is suggesting to the management, so please adjust the notes to account, disclose, sir, so that everybody will alert. If the management disclosed, no problem. If the management don't disclose this fact, auditor will give the qualified report. Shall we proceed? Now this is about the standard number 570, going concern assumption. Market is important for examination. Now let us discuss about SA700. Yesterday class continuation. Forming an opinion and reporting on financial statements. Now let us come to the 705 first, about the segregation of the audit reports. Now this is about the audit report segregation. 705 page number 50. From the page number 50, one question is damn sure for exam. From the page number 50, one question is damn sure for exam. The reason is follows. So 705 talks about modified report, 700 talks about clean report. So let us discuss about the audit report. Audit report can be classified as a two types of reports. One is unmodified report, second one is modified report. In the previous class also we discussed about the same. Modified report can be further classified into three categories. What is that? Qualified, adverse and disclaimer. Quad. Shall we? So in the modified report, we are going to add emphasis of matter para and other matter para. What is the meaning of emphasize? Highlighting of the para. We tell when you say emphasize on this, you mean to say that you highlight this para. So any important points auditor wanted to disclose, he is going to disclose in emphasis of matter para. So emphasis of matter para, other matter para will come only in modified report. Why? He want to highlight what is the problem in the company. In case of unmodified report, is the clean report. Now first let us understand about unmodified report, understand about the clean report or unqualified report, then we will come to 705. Shall we proceed? Now, unmodified report. Examination questions, straight away they may ask for this particular. What are the basic elements of audit report? What are the basic elements of audit report? That means this is the statutory format. Statutory format. When I say statutory format, what it means? You should not change the order in examination. Okay, when you are writing in examination, you have to follow this order. Now, how the audit report look like? Audit report is going to have title. First, let us read all the points. We will go to the one audit report. We already given Amar Raja, energy and mobility remote at the end of the book. We will check whether points are matching or not matching. Shall we? Audit report is going to contain to whom you are addressing. To whom you should give the audit report? Appointing authorities. That is called addressee. Then auditor is going to give the auditor's opinion. How many types of opinions? 4 types of opinions. How many opinions auditor has to express? Any one opinion only. What kind of opinion auditor is given, auditor has to tell in the audit report. What is the reason for your opinion? You have to give the basis for opinion. Why you are giving clean report? Why you are giving qualified report? Why you are giving adverse report? You have to give the basis. Point number 5, just now we discussed it, sir. Tell about the genuinity and going concern of the company. Then key audit matters. If auditor wanted to highlight any of the key audit matters, he has to write in this particular para. What is the responsibility of management? I have to mention in my audit report, because otherwise public may understand that is my responsibility. Then what is my responsibility as auditor? I have to mention in the audit report. Then other reporting legal requirements, 9th point. That means along with the audit report, any other legal and regulatory requirements is to be mentioned. I have to mention. Example, CARO 2020. Internal financial controls. Then sign of the auditor, place of the signature where you are signing the audit report, then insert the date along with the UDN number. With this, audit report is going to complete. Now tell me, what are the elements of audit report? Title of the report. Now let us see how the report look like. Go to the end of the book and let us take title of the particular reports. So this is the independent auditors report, page number 108. Page number 108. Independent auditors report. So what is the title, sir? What is the title? This is title. So title of the audit report should be as independent auditors report. They may ask you in the MCQ based question. So title of the audit report may be as follows: audit report, independent auditors report, independent auditing report, like that they may ask. So answer is independent auditors report, because I am giving my personal report. That's why auditors. It is not apostrophe. This is auditors report. Shall we proceed? Next is what? Second point. Addressee. To whom I am addressing my report? To the members of the company. That means to the shareholders of the company I am giving audit report means who might be appointed the auditor? Shareholder might be appointed the auditor. Shall we proceed? Then opinion para. Auditor's opinion. Now what is? We have audited the accompanying standalone financial statements of Amar Raja Energy and Mobility Limited Company, which comprises of balance sheet, profit and loss statement, cash flow statements, then notes forming part of financial statements, then accounting policies. Okay. Now what is next point? Basis for opinion. Why I am giving clean report? Let us see the opinion. What kind of opinion auditor has given? In our opinion, this para is very important para for exam. In our opinion, that means auditor is giving conclusion. Everything is completed. Now auditor is giving conclusion. Conclusion should be given in the form of opinion. Opinion should be given in the form of report. Report should be given as per SA 700 or 705, whatever applicable to the company. Now I am giving what? Opinion. In the form of what? Report. To whom I am giving report? Appointing authorities. Shall we proceed? Now I am giving, in our opinion, unto the best of our information, according to the explanation given to us. Who is going to give you explanation? Who is going to give explanation? Management is going to give explanation to auditor. According to the explanation given to us, aforesaid standalone financial statements gives the information as required by the Companies Act and gives a true and fair view. Gives a true and fair view. When I say true and fair view, what is the meaning of this particular word? There is no material misstatements in the particular Amar Raja Energy and Mobility Limited Company. That means there are no errors, no frauds. Shall we proceed? Now, it is in conformity with the Indian accounting standards. Financial statements should be prepared by whom? Management. And it is as per the Indian accounting standards. Now, sir, why you are giving true and fair view, sir? I cannot say in this para, I will tell in next para. What is next para? Basis for opinion. Why auditor has given clean report? Why auditor has given true and fair view report? I am giving the reason for my opinion. What the auditor has given the reason? We conduct our audit in the standalone financial statements of the company. Our responsibilities under this is auditor responsibility for the audit of financial statements. We are independent of the company. First point. We are independent of the company. Shall we proceed? And we are following all the code of ethics given by the ICI. Now, listen very carefully. We believe that audit evidence obtained by us is sufficient and appropriate. In the previous class, we discussed about audit evidence. Audit evidence should satisfy how many conditions? 2 conditions. What are 2 conditions? Sufficiency and appropriateness. Hence, I am given true and fair report. No. Sufficient, appropriate to provide a basis for our audit opinion on the financial statements. Because only one reason, I got the sufficient appropriate audit evidences, and we believe that based on that we can give the clean report. We given the clean report. That's all. No. We don't believe the auditor. Check my working paper, sir. Check my plan, check my working paper, check my discussion with the management. I have everything in my file. Check and you can ask any queries, I will reply. Shall we proceed? No. Now they given emphasis of matter para. for the benefit of the users. There is no issues in the company. Why there is no issues in the company? Because I given the clean report. But I want the emphasis of the users, focus of the users. Even though it is a clean report, I want to give emphasis matter para. Why? Because I want to give the attention of the users. So there is a note number 47 of the particular notes to accounts. It talks about there is a scheme of arrangement approved by the NCLT. As stated in the said note, the scheme has been given effect from the April 2022. There is a Ministry of Corporate Affairs. According to the comparative information for the 31st March 23, including the standalone financial statement, have been restated. Our conclusion is not modified in this respect of this matter. So there is some amalgamation procedure going on in the company. There is some arrangement, scheme of arrangement is going on. The case is with NCLT. And we want to give the attention to the users. In our conclusion, it is not modified in the respect of this matter. We don't want to give any modification report regarding this. No. Title of the standard. Now go back to the SA 700 points. What is the first point we discussed? Title. What is second point? Addressee. What is third point? Opinion para. What is fourth point? Basis for opinion para. Are you matching or not? Everything is matching or not? Fifth para. Going consumption. Next para. Key audit matter paras. Yes, they given key audit matter paras. Next para. Now, yeah. Responsibilities of the management. Next, auditor responsibilities. Report and other legal and regulatory requirements. Let's come to the end. Now see signature of the auditors. Signature of the auditors. Very good. Place of signature. Place of signature. Date of audit report. Date of audit report. UDIN number. UDIN number. So there is a joint auditors in this company. SA 299. What auditors? When we call it a joint auditors, when for one company, when there is more than two auditors, we call it a joint auditors. How many companies? One company. How many auditors? More than one auditor. Two or more auditors. We call it as what audit? Joint audit. As per standard number 299. Now listen very carefully. Amar Raja Energy Mobility Limited, joint audit or single audit? Joint, because how many auditors? 1 and 2. Yes. Now listen. One auditor is signing at the Hyderabad, other auditor signing at Chennai. What is the significance of this place? It decides about jurisdiction of the auditor. If any users of financial statements or management or director want to file a case against auditor for negligence, as if they have not performed the audit properly, then where they have to file a case? Come to Chennai and file, because this is what my jurisdiction. You cannot file case from New Delhi. Okay. In case of this particular auditor, you come to Hyderabad and file. Anybody want to bring a charge of negligence against auditors? This place talks about jurisdiction of the auditor. Don't mug up for examination. Clear? So these are the contents of audit report. These are the contents of audit report. Shall we proceed? Now come to the, what is the page number? 40? Contents of audit report. Title. What is the title of the audit report must be? Independent Auditors Report. Examination question. Question number 1. Samrat and Associates are the statutory auditors of Hot Meal Limited Company for 2021. How will the auditor address this report issued on the financial statements of the 2021? Also give title of the report. How to write title? What is the answer for the given question? How to write a title in this case? Independent Auditors Report is the title. To whom I should give the audit report? Members. Who are the members here? Hot Meal Limited Company members. So 2 members of Hot Meal Limited Company. Clear? Examination question. Now question number 2. Richa International is a partnership firm dealing in exports of blankets. The partners of the firm are Richa and Ashish. Explain how the statutory auditors of the firm will address the auditor's report. How to address? To whom I should address? Independent Auditors Report to the partners of Richa International. I should not give to any individual person. In the company also I not given to any individual member. I addressed it to the members of the company. In case of partnership firm also I not given the report to any individual person. I given to the partners of the Richa International. Point to be noted here is Independent Auditor Report is the title. Addressee is whoever appointed the auditor. Opinion para. From here onwards you should practice for exam by writing the paras. Okay. Now they given the examination question like this. So there is a audit firm who are the statutory auditors of Ringston Limited Company, which is the company engaged in the business of manufacturing of pen drives. The auditor has started drafting the audit report for the financial year 21-22. CA Mr. Amitabh, the engagement partner of the firm, has viewed that financial statements of Ringston Limited represent true and fair use. Give the draft opinion para of the audit report. How to draft opinion para? You have seen Amar Raja Batteries, Amar Raja Energy Mobility Limited. Now this is opinion para. First, there are 2 paragraphs in opinion para. First para talks about the what constitute of financial statements. Second para talks about what kind of opinion you are giving. Why you are giving is given in basis for opinion para. Okay, opinion para constitutes how many paras? 2 sub paras. What is the first para? You have to mention financial statements. What is second para? What kind of opinion you are giving, you have to mention. Now in this particular case, question says it is true and fair use. In the opinion para, you have to say based on the explanation given to us, audit we are going to give the true and fair use. Now you can see here. In our opinion, best of our information, according to the explanation given to us, aforesaid financial statements gives as required by the Companies Act and give a true and fair use in conformity with the accounting principles generally accepted in India. What financial statements? Profit and loss, balance sheet, notes, and including significant accounting policies, explanatory information. They may be tested for examination. So you have to draft how the opinion para look like. Go and see the Amar Raja Energy Mobility Limited Company. Now basis for opinion. So what might be the basis for opinion? We obtained all the information, explanation, all sufficient appropriate audit evidence, hence we are given the true and fair use report. Yes or no? Now see here. They given the question. Kite, Wright and Associate the statutory audits of Prime Deluxe Limited Company. At the time of finalizing the audit report, one of the audit team member has asked the engagement partner what all should be included in the basis for opinion. The engagement partner of CA Kite explained the team members in detail and asked Mr. Robin to draft the section of auditor's report and helped Mr. Robin to draft the basis for opinion section. In examination, they are asking you to draft the basis for opinion para. So I have given the opinion as given in the opinion para. I have to give the explanation here. Now You have to mention all these things. We have conducted our audit according to the standards in auditing. We followed the code of ethics given by ICI. So you see here. Then the relevant financial statements provided all the information, explanation, and ethical requirements have been complied with, and we got the sufficient appropriate audit evidence. So this is the basis for our opinion. So please highlight these points. One is according to the standards in auditing. Second point is about the code of ethics issued by the ICI. Third point is we have fulfilled the other responsibilities. Fourth point is we have obtained sufficient appropriate audit evidence. These are the 4 important points. I will highlight here standards in auditing, code of ethics issued by the institute, other ethical responsibilities, obtain sufficient appropriate evidence. So for this only you are going to get the marks in examination. 4 points. Basis for opinion para. Now management responsibilities. So I am leaving it a homework for you. Auditor responsibilities also. Now let us see the question number 7. How to sign and how to insert a place. So Suresh, Kumar and associates are the chartered accountants of Venky's India Limited Company for 21-22 financial year. At the time of finalizing the audit report, one of the audit team member asked the engaging partner, Mr. Suresh, to explain as to how the audit report will be signed. Please help. How to sign? You have to mention the firm name and tell they are chartered accountants and firm registration number given by the ICI. Then you have to mention the signature, name of the chartered accountant, designation as a partner, then membership number given, then UDA number, then place and date. This box you have to prepare in the exam. So sign and place means don't just mention sign and place. You have to, on behalf of whom you are signing, on behalf of your firm you are signing, on what capacity you are signing, partner capacity, where your firm is registered with ICA, you have to mention all these details, otherwise you cannot sign, right? Example, if I want to sign, I have to tell on whose behalf I am signing. I am signing on behalf of A. Suresh Kumar and Associates. Who is A. Suresh Kumar and Associates? Chartered accountants. Who said they are chartered accountants? I have a firm registration number given by ICA. Now sign. On what capacity you are signing? Partner. Where you are a partner, what is your membership number? Mention. Then generate the UDA number from ICA website. Then insert here. Then mention the place, that means jurisdiction of the auditor. Then insert the date also. Done. So with this, SA 700 is over. Now let us go for question number 5. Market is important for examination. Management responsibilities. How to draft the management responsibilities. In the previous class, we discussed about 2 important points about management. So what are the major 2 responsibilities of management? Management is responsible for preparation of financial statements. Very good. And also management responsible for internal control system of the company. If you write these 2 points, you can score more marks in examination. Now let us see. Now they are asking you to prepare the management responsibility para. So Diamond Limited, a company engaged in the manufacturing of the so and so or the statutory audits of the company, explain how the management can responsibilities in the auditor report. Now let us go to the Amar Raja Batteries Limited company. Read the management responsibility para there. Responsibilities of management. Let us learn in practical way. Management responsibilities. Now, management may consist of whom and whom we discussed in yesterday class. Now we are giving the company's board of directors is responsible for the matters given in 134(5) of the Act with respect to what? Preparation of the financial statements that give a true and fair view. Who has to ensure that financial statements are true and fair view? Management. You should ensure, sir. What is true and fair view? There is no definition for true and fair view. Then how to consider true and fair view or not? Consider all the assets, liabilities, incomes, expenses, all statutory compliances, no change in accounting policies. Then we call it true and fair view. Now management responsible to ensure the true and fair view of the financial position. What is the meaning of financial position? Balance sheet of the company. Financial performance. What is the meaning of financial performance? Profit and loss of the company. How we are performing, profit or loss. Then including other comprehensive income, cash flows of the company, change in equity of the company in accordance with the accounting principle generally accepted in India. Right? They are elaborating the para. This entire talks about what? Financial statements. Who is responsible to prepare financial statements? Management responsible to prepare financial statements. What financial statement consists of? Balance sheet, cash flow statement, profit and loss, significant accounting policies, statement of changes in equity capital. I am mentioning that also in my audit report. Then listen very carefully. Paragraph number 2. The responsibility also includes maintenance of the adequate records in accordance with the provisions of the Act for safeguarding the assets of the company and for preventing and detecting the frauds and other irregularities. Who is responsible to prevent and detect the frauds? I am mentioning that point also in management para. Otherwise, the others may blame the auditor. Sir, it is your responsibility. There is one standard called standard number 240. Hence, you identify the fraud. Sir, no, sir. Please read the management responsibility para, sir. We already mentioned in the management responsibility para what I have mentioned. Detecting fraud and other irregularities is also your responsibility. Preventing of fraud is your responsibility, not my responsibility, sir. Then making of the judgments and estimates that are reasonable and prudent, and design and implementation and maintenance of adequate internal controls. Not only designing and maintaining, whether operating effectively or not, that also should be ensured by the management only. Ensuring accuracy and completeness of accounting records. Preparation and presentation of the standalone financial statements, which are free from material misstatements, whether due to fraud or error. So simply, you have to mention about the preparation of financial statements. You have to mention about the maintenance of books of accounts. You have to mention about the internal control system. You have to mention about prevention and detection of fraud is the responsibility of management. 4 points. Now let us see examination question. Now see management responsibility para. How to write in examination? Who is responsible to prepare? Management. So that's what I am mentioning here. So first para, preparation of financial statements. That's all. Then framing of the entire para. Second para, maintenance of the accounting records, and also design, implement and maintenance of the internal controls. Then again third para, you have to make sure that your company is going to run on going concern basis also. disclose. Your company is not able to run on going concern basis, disclose in the financial statements. Then company's financial reporting process. This may not be required. Now you understand this. Preparation of financial statements, maintenance of accounting records, internal control systems. Internal control system design is the responsibility of management. Implementation is the responsibility of management. Maintenance is the responsibility of management. Auditor is no way connected with regarding this. Auditor is only review the controls. Then fraud and errors. Responsibility of management. Then going concern to be ensured by again management. So if you cover all these points, management responsibility para is over. Now tell me, what is auditor responsibilities? You are putting all responsibilities on management. What is auditor responsibilities? Very good. Obtain the reasonable assurance. Then obtain sufficient appropriate audit evidence. Exercise reasonable skill and care. Now let us see that. It is the responsibility of auditor to obtain reasonable assurance. Question number 6. Then reasonable assurance itself is the highest level of assurance. Then I am giving in my para, my opinion is not a guarantee for anybody. Nobody can give a complaint on the auditor stating that based on your opinion only I invested in so and so company, I have lost everything. You cannot say like that. Because in my para I am giving, I am not a guarantee for anybody's investments or interest. Then misstatements can arise from fraud and error, are considered as a material if individually or in aggregate they are expected to influence the economic decisions of the users. Yesterday class we discussed about material misstatements. What is the meaning of material misstatement? Significant misstatement. When it is going to become significant? When influence the decision making power, it is going to become significant. How it can influence? Maybe individual amount or maybe aggregate amount. We have seen 125 rupees, 125 into 1000 customers also. Then that's all. So major point is only about reasonable assurance. So we discussed all the questions in the SA 700 also. Yes, you can write only important key points. That's why I am highlighting the key points. At least when you are mentioning in the examination, double underline, keep in double quotation. So that the paper evaluator can understand, okay, this point is covered, okay, let us give the mark. Other thing is only your English. So you need to mention reasonable assurance. You cannot say only assurance, you should mention reasonable assurance. You cannot say as that reasonable assurance is the highest level of assurance to get more marks. Then again you have to mention that what is the misstatement means, to whom, for the benefit of the users I am giving explanation. So just give the key points, enough. Now let us come to the SA 705. In yesterday class, we discussed about when I have to give the qualified report, when I have to give the adverse report, when I have to give the disclaimer of opinion report. Shall we proceed? No, the same is given here. Already discussed in yesterday class. Again for the benefit of the students, again let us go, because very important for examination. Page number 50, one question guarantee for exam. Okay. Now, as per SA 705, modified opinions can be 3 types of opinions. What is that 3 types? Quad. Correct? Quad. Now let us come from the back. When auditor is going to give disclaimer, the auditor shall issue a disclaimer when he is unable to obtain evidence. That's all. No, there is a new language we found here. Pervasive material. Okay. Now, what is the meaning of material? Significant, but because of this there is no damage to anyone. Pervasive. Hence I am giving qualified report. In case of qualified report, auditor having obtained, he is able to obtain the evidence and is having material misstatements, but not pervasive, but no damage. Because there is no damage, nothing has happened, there is a material misstatement, but management is rectifying that misstatement. Hence I am giving qualified report. Sir, there is a big damage also, sir. They have looted lot of money, but not recovered, pervasive. In this case only I go for adverse opinion. If there is no pervasive, always qualified only. Shall we proceed? When I am going to give the qualified report, I am able to obtain, not able to obtain. I am able to obtain the evidence, but there are misstatements. Misstatements are not pervasive. In case of adverse opinion, I am again able to I am able to obtain evidences, but in this case it is a material and also pervasive. From these three tables, one table come for exam. Very simple to answer in examination. Auditor is able and he found misstatements, but is not pervasive. What report? Qualified report. Auditor is able to found misstatements, also pervasive. What report? Adverse report. Auditor is unable. Disclaimer. So in this case able, in this case also able, in this case unable. Here please understand, in the qualified report, able, there is a material misstatement, but there is not a pervasive. In this case able, there is a material misstatement, it is also pervasive. Shall we proceed? So this entire box is given in the form of, again, table for your reference. Come to question number 4. Come to question number 4. Mark it as very important for exam. Shall we? No. So financial statements are materially misstated. Situation number 1. Financial statements are materially misstatement. So when you see the material misstated, it is a material but not pervasive. Auditor will go for what? Qualified opinion. Material but not pervasive. If it is in case of material and pervasive, adverse opinion. Okay. Now listen very carefully. Second point, market is important for exam. In the second point, auditor is inability. Auditor is unable to obtain the evidence. Because he is unable to obtain the evidence, there is a possibility for material misstatement. If auditor feels it is also pervasive only, he is going to go for disclaimer. Otherwise, always qualified only. Both conditions should be satisfied. In order to give a disclaimer, he is unable to get the evidence. and there may be possibility for pervasiveness also. In that case only we will go for disclaimer. Please understand, this is what important for exam. Not merely because of unable cannot go for disclaimer. I am unable to get, first check the qualified report. So when I go for this disclaimer, it is also material plus pervasive, both. Now one line summary, sir, you tell me in a simple manner, sir, very simple. Come to material and pervasive. Auditor is able, go for adverse. Material and pervasive, unable, go for disclaimer. Both should be satisfied. Only one case, only material but not pervasive, always qualified report. Done? So with this essay 705 also over. So we'll take a break and we'll continue the session from 2 onwards, 2 p.m. 1 hour break we'll take. Now let us continue with the joint audit. Standard number 299. Now just now we have seen in Amar Raja Energy and Mobility Limited Company, joint auditors. What is joint auditors? More than one auditor. Now, whenever there is a joint auditor concept, the joint auditor should be perform the joint audit as per standard number SA 299. So one time they asked for examination, page number 73. So always there is going to be more than one auditor. Example, A and company and B and company chartered accountants. So joint auditors. So whenever the joint audit is going to be performed by the joint auditors, then the biggest question is how to share the responsibility. Now let us discuss about this particular standard, which is important for examination. Very easy standard, very easy to understand as well. SA 299, joint auditors. Now tell me, how many companies? Very good, one company. How many auditors? Two auditors. Okay. For the same company, for the same financial year, for the same financial statements, two auditors are going to do the audit. Able to understand or not? How many companies? One company. How many financial years? One financial year only. Then how many financial statements? One company financial statements only. But how many auditors? Two auditors. There may be a possibility for there may be a third auditor also, there may be a fourth auditor also, there may be a fifth auditor also, like that. Two or more auditors in case of the joint auditors concept. Shall we proceed? Now the discussion point is, when there is only one company, the financial statements of the company consist of performance of the company, position of the company, cash position of the company, notes to accounts of the company, equity capital changes of the companies. Yes or no? Now, who is going to appoint the auditor? Company is going to appoint the auditor. Now listen very carefully. Company is going to appoint the auditor, but company is not going to segregate the audit work. Now this profit and loss account, balance sheet, cash flow statement, notes forming part of financial statements, equity changes, everything will be shared by joint auditors mutually. That means work will be shared by the joint auditors mutually. They have to discuss among themselves, they have to conduct a meeting, and they should share the work. Shall we proceed? Now, company, auditor 1, auditor 2. This is one CA firm, this is another CA firm, A and Co, B and Co. Now for the same company, for the same company, the CA firm plus partners plus team will come for the audit. From the B and company CA firm, partners plus team will come for the audit. Respective CA firm has to assign the respective team members to carry out the audit of the same company. We have seen in Amarraju Energy and Mobility Limited company, 2 auditors, company is same, 1 financial year, same financial statements. Now, how to segregate the work? Mutually. Now, you tell me, what might be the parameter to segregate the work? First of all, how many financial years? Very good. Financial year is equal to how many months? Very good. 12 months. 12 months having how many quarters? Quarter 1, quarter 2, quarter 3, quarter 4. Now we got the answer here. The first parameter to share the work is based on time. One auditor may do quarter 1, quarter 2 audit of all the transactions. Other auditor may do quarter 3 and quarter 4 transactions, all the transactions. Shall we proceed? Now point number 2. Sharing of the work among joint auditors may be as follows. Financial statements, profit and loss account can be taken by one auditor. Balance sheet can be taken by another auditor. Yes or no? Profit and loss account, sir, I will do the profit and loss account, all line items. Other auditor, you do the balance sheet, all line items. Then let us consolidate. Let us close the audit. Right. Now, third parameter, the joint auditors may discuss. Sir, no, sir, we don't agree for that. So, profit and loss account, expenses and incomes, right? So, incomes alone you take, sir, one auditor, A and company. Expenses I will take, sir, B and company. Exactly similar lines. Balance sheet, assets you take A and company, and liabilities you take B and company. Ultimately, everything to be covered, right? Everything to be covered. So, like this, joint auditors can discuss among themselves and they can share the work. So, point to be noted very clearly. Common areas should be mutually take responsibility. What is the meaning of common areas? So, example, I have taken profit and loss account, another auditor has taken balance sheet. Okay. Profit and loss account, that means trading and profit and loss account, we have a closing stock. Balance sheet also we have a closing stock. Common area or not? Common area. Now, whenever the person is doing the balance sheet audit, the person has to check the closing stock. Whenever the person is doing the profit and loss account, they have to check the closing stock. They should enter into a common arrangement. Sir, we have a common area, so you please complete the closing stock verification, and they have to discuss among themselves. So, one more example, sir. Depreciation, fixed assets. How fixed assets closing value are obtaining? Opening balance plus purchases minus depreciation or minus deletions minus depreciation is closing stock. That means closing balance. Yes or no? Here also depreciation is there in the profit and loss. Here also formula there is depreciation. Who has to verify the depreciation amount now? They have to arrange. Come to a common arrangement. So, like this, there may be a possibility that common areas may be neglected. So, in order to not to neglect these common areas, auditor should come to a common understanding and they have to complete entire audit, because they both are not same firm now. They are different firms, different attitudes, different technology, different expertise team, different partners, different age criteria, everything is different. Shall we proceed? Now, once audit is completed, what they are going to prepare? Independent auditors report. Now how many auditors in joint audit? 2 or more auditors. Now how many audit reports they are going to prepare? 2 audit reports. Independent audit report, 1, 2. What is the problem here? When 2 reports are given, users may get confusion. Again they may come to a common conclusion. Sir, you are giving true and fair view, I am also giving true and fair view. Let us cumulatively give the report, and at the end of the report we will both sign, sir. Like you have seen in Amar Raja Energy Limited. Deloitte and also signed, Brahma and company also signed. 2 auditors at the end of the page they have signed. That means when both auditors come to a common conclusion to match the report and to issue, it is called as common audit report. When common audit report will come? When there is a common opinion. When there is a difference on opinions, they can issue different audit reports. Now the examination question. Listen very carefully. There are 5 joint auditors. A and Co, B and Co, C and Co, D and Co, E and Co. How many auditors? 5 joint auditors. One, 2, 3, 4, 5. Okay. First joint auditor wish to give disclaimer. Second joint auditor wish to give unmodified report. That means clean report. Third auditor also unmodified, clean report. Fourth auditor unmodified, clean report. Fifth auditor want to give qualified report for the same company. Now tell me, majority of the auditors are giving unqualified report, clean report, hence can they pressurize this A and company and E and company to give the common report? Yes or no? This is what examination question. Every auditor in India has their fundamental right to issue their own reports because it is independent audit report. When they pressurize the auditors, it is going to become dependent audit report. Sir, it is as per my observation. It is as per based on my reasonable assurance. It is based on my sufficient appropriate audit evidences I am giving my report. Yes or no? No. So in this examination question is, majority of the auditors report is not bound to be followed by other auditors. Not bound to be followed by other auditors. Every auditor can issue their own report. But in case of all auditors, example 5 auditors wish to give a common opinion, they can all give only one report. But when there is a difference in opinions, everybody can give their own reports. Shall we proceed? Now what are the advantages and disadvantages of because of this joint audit? What are the advantages and disadvantages of because of the joint audit? These advantages and disadvantages, we have to some of the points think from the auditor side, some of the points think from the management side also. Shall we proceed? Now let us go for the examination question. Joint audit. Advantage, disadvantages of joint auditors. Now let us discuss about advantages. Sharing of expertise. To whom it is advantage? 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 Sharing of expertise. To whom is advantage? Sharing of expert knowledge. My firm also giving expert knowledge, other firm also giving expert knowledge. To whom it is advantage? Company it is advantage. Because when there is only one firm, the one firm may or may not give the expert knowledge. When there is two firms, the competitive environment, they can give more knowledge and they competitively work. Ultimately, who is going to get benefited? Quality in the audit will come, and ultimately it is a benefit for the both auditor and the management. How both auditor and management? Because there is a competition among the auditors, they can do quality work. For management it is a benefit, quality audit has been carried out. For the auditor also it is benefit, I have qualityly done the audit, there is no question of charge of negligence against auditors. Shall we proceed? No. Mutual consultation, to whom it is advantage? Auditors. Why? Mutually they will discuss and they will complete the audit in a short span of time. If one auditor is going for the audit, it may take 2 months, 3 months time. If two auditors mutually going for it, it may complete in 1 month also. Low workload. To whom it is low workload? For the auditor it is lower workload. If one firm is carrying out the audit, I may send some 10 expert staff. I may be spending more days on the particular client place. If it is a two auditors, they can divide the work. When the work is divided, automatically workload will come down. It is an advantage to the auditors. Shall we? Fourth, quality of performance, just now we discussed. Auditor is going to perform the audit in a quality manner because there is a two auditors, always they compare. Why they compare? Attitude problem. And they will compare because age problem. They compare because ego problem. They compare because firm qualities problem. They compare because junior senior comparison. They compare because other firm may be small firm, other firm may be big firm. So hence they both will competitively work in the organizations. Improved service to the client, whom it is advantage? To client it is advantage. Because I am also giving a quality work, other person also giving quality work. Ultimately client got the improved service. Instead of two auditors, if they appoint four auditors, four auditors will work competitively. If you look at the bank, if you go for any bank audit, normally statutory audit of banks, they will appoint 5 auditors, 6 auditors like that. Because large volume of transactions. It is not possible for them to done by one auditor or two auditors. Now, using the expertise of the firms. So automatically when joint audit is given, what the firms are going to do? The firms are going to prepare pakka plan, audit plan. They are going to assign the team members. They are going to give the work. You take care of the senior staff and junior staff segregation. So like that they are going to give the works. So automatically it is advantage to the audit firms also. Lower staff development cost. That means I no need to pay the higher salaries for my staff. Because why? Already third point, workload has been come down because of the work is divided. When the work is divided, instead of sending 10 staff member, I will send only 3 staff member. When I am sending 3 staff member, I will pay salary only to 3 staff members. So to whom it is advantage? Auditor. Lower staff development cost. Next, lower cash to carry out the work. Earlier when the 10 members are going for audit, I have to spend the travel expenses, food expenses, boarding and lodging expenses, then every expenses to my staff. Now because the low staff, low carrying cost also. Then another advantage is competition among the audit firms. Healthy competition. Their firm is doing in a better way, my firm also doing in a better way. I may compare with that firm. If I am not doing properly, I may compare with them, I also do properly. Whether opposite firm is not performing well, they may take me as a inspiration, they will do properly. So there is going to be a healthy competition among the auditors. So it is advantage to the auditors. It is advantage to auditors. Advantage to management. Management. Better quality of performance. Management. Auditor. Auditor. Auditor and management. Shall we? Now let us revise once. Expert knowledge sharing, mutual consultation, lower workload, quality of performance, improved services to client, expertise of the firms, lower staff development cost, that means low salaries, low cost to carry out the work, that means audit cost will come down, healthy competition among the auditors. Now, what are the disadvantages because of joint audit? To whom it is disadvantage? Auditors only the disadvantage. How? Let us discuss. Earlier I am getting only one firm, every fees get by one firm, total complete fees. Example, 10 lakhs is the fees amount. 10 lakhs will be received by only one firm. Now, because fees has been split into two firms. Disadvantage? Disadvantage. Psychological problems, because different firms know, different people working in the organizations. So, firms of different standing, that means 10-year experience, 20-year industry, we are 30 industry, like that they are going to compare, and psychologically they feel that they may degrade the other firm. Your junior firm, listen whatever I say, they may command the opposite person, but we have to mutually agree and you have to go with the work. Then superiority complexes of the some auditors, ego clashes. I am a senior auditor, I know what to do, what not to do, you don't teach me anything. But as far as the institute is concerned, there is no segregation of the senior auditor and junior auditor. Every auditor have equal rights. Whether junior auditor sign the balance sheet or senior auditor sign the balance sheet, same value only. But auditor only will show the ego clashes. That is the disadvantage. Problems of coordination of the work. My firm is doing work in a very speed manner, other firm is doing in a slow manner. But we have a common target to complete the audit. But when there is no proper coordination, when there is no joint meetings in the firms, it is difficult to complete the audit. It is a disadvantage to the firms. Common areas, work of common areas may be neglected by the auditors, like closing stock, depreciation, loans versus interest, everything may be neglected. When the work is neglected, ultimately both the firms has to take responsibility because it is a common area. If you don't consider these common areas and if you issue a report, it leads to professional misconduct. Because of what? Negligence. Whose negligence? Hence both should sit and discuss. Then liability of the work done. So there may be a possibility that auditor may not be performed the audit in a perfect manner. There may be a possibility in future auditor may be caught, maybe by NEFRA, National Financial Reporting Authority, maybe by ICI, peer review. Auditor may be caught. At that point of time, auditor has to face the consequences. Shall we proceed? Now, these are the advantages of the joint audit. So, with this, standard number 299 is over. So, we discussed about the meaning of joint audit. We discussed about the how to share the work among the joint auditors. Then we discussed about the common areas, how to give the treatment. We discussed about the opinions, how to give the treatment. We discussed about the majority auditors' opinion is not bound on other auditors. Then we discussed about advantage, disadvantage of joint auditors. So, why we discussed about joint audit? Because we have taken SA700 audit report, Amarraj Energy Mobility Limited, we have taken, there we have seen two auditors. So, let us complete this, then we go for other area. That is the reason we have taken this and we are done with the SA299 joint audit. Now, let us go for the standard number 520, analytical procedures. Standard number 520. Very important for examination, analytical procedures. Now let us discuss about standard number 520. Analytical procedures. Now what is the meaning of the word analytical? Analysis. Then what do you mean by analysis? When we can say something is analyzed by the person? Okay. In-depth examination. Then what is analysis means? Study of the financial statements. What the meaning of analysis means? Interpretation. Then what the meaning of analysis means? Comparison of data. Then what is the meaning of analysis? Evaluation of results. So these are the common meaning of the particular word analysis. So in-depth examination, analytical means analysis, analytical means study of the data, then comparison of data, interpretation of the various data, evaluation of the results, etc. is called as analysis. If auditor do all these activities, it is called as analysis of the or analytical procedures. What is the meaning of procedure? What is the meaning of procedure? Very good. Way of doing job. Way of doing job is called procedure. What is the meaning of way of doing job? Step by step approach. Step by step approach. Now analytical procedure is a one method of obtaining audit evidence or not? How many methods of obtaining audit evidence we have? 7 methods. Out of the 7 methods, what are the 7 methods? Quickly. Inquiry, inspection, observation, recalculation, reperformance, external confirmation, analytical procedures. We are discussing about this analytical procedure. Why auditor is performing analytical procedures? Don't forget about the core area to obtain audit evidence. Don't consider this standard as a separate standard. All 500 series of standards talks about audit evidences only. All 500 series of standards talks about audit evidence only. In examination, whether they ask about SA'500 audit evidence, they discussed about audit evidence only. SA'501 they discussed audit evidence, specific consideration for selected items. It is also about audit evidence only. Then 505 external confirmation, audit evidence only. Then 510 initial engagements, opening balances, audit evidence only. 520 analytical procedures, audit evidence only. 530 audit sampling, audit evidence only. Then 550 related party transactions, audit evidence only. 560 subsequent events, audit evidence only. 570 going concern, audit evidence about going concern. All 500 series of standards talks about audit evidence only. Now we are discussing about 520 analytical procedures. Shall we proceed? Now, out of the 7 methods of obtaining audit evidence, one of the method is analytical procedures. So this has been dealt as per SA'520. Shall we proceed? Now, what is the meaning of analysis? In-depth examination, analysis of data, study of data, comparison of data, interpretation of data as per the law, and evaluation results of the data. What is the meaning of procedure? Way of doing job by auditor. How he is going to do the job? Step by step approach. Shall we proceed? Now let us discuss. Now tell me, my dear friends, let us take a profit and loss account. So profit and loss statement has shown advertisement expenses. What expenses? Advertisement expenses. Example 22, 23, 21, 22. Let us take it is in crores. 21, 22 it is 2 crores. 22, 23 it is 5 crores. Now tell me, as an auditor, how we are going to deal with this situation. First, what you are going to do? Very good. Compare. What you are going to get? Difference amount we are going to get. What is the difference? 3 crores. Positive or negative? Excess or shortage? Compare with the previous year. In the current year, the client has spent 3 crores excess advertisement expenses. Shall I proceed? No problem for me. As an auditor, I don't have any objection relating to 3 crores. I am also comparing with the revenue. Previous year revenue is 100 crores. Current year revenue is 80 crores. Impact, negative or positive? Negative. How you are able to say negative? Because you have done analysis. Straight away when you look at the amounts, you are not able to tell whether negative or positive. You are arriving at the difference first. Difference is, compare with the last year, current year is negative. Sir, in the previous year, for 100 crores achievement of turnover, you spent 2 crores advertisement expenses. We don't have any objection for this. In the current year, you paid 5 crores advertisement expenses. You may be double the revenue, but you got only 80 crores. Give me the explanation, clarification, and presentation for the particular transactions. Give me information, give me explanation, give me clarification. It is the responsibility of management to give the info, explain to the auditor, and clarify to the auditor why you have paid excess advertisement expenses. And they may say, sir, actually last year also 5 crores only. Due to COVID, we paid only 2 crores as an arrangement with the particular advertisement agency. If you satisfy with the explanation, clarification, and the information provided, no problem. But assume a scenario, there is no abnormal situations in Indian country. Then how you are going to deal with this situation? Management manipulated. Management paid the amount of advertisement expenses to related parties. They may tie up with the cinema hero or cinema heroine, and they have given lot of amount to them and get back through back door. Yes or no? So how you are able to do all these things? Because you are comparing with the previous year, right? And let us take another example. Revenue. Let us take XYZ Limited Company and ABC Limited Company. There are two companies, 22, 23, here also 22, 23, 21, 22, here also 21, 22. Salaries and revenue. Salaries and revenue. Now, revenue is 100 crores. Here also revenue is 105 crores. Salaries, XYZ Limited Company paid 28 crores. ABC Limited Company paid 44 crores. Okay. Now what I am doing? I am auditor for this particular company. I am doing audit of this particular company. Right. There are some other auditor who is doing this particular company. Now, if you are an auditor of ABC Limited company, what you are going to do? You are going to do inter-firm comparison. Sir, both companies are in the same line of business, right? On the sales revenue achieved by the one company is 105 crores, for which they paid 44 lakhs of the particular salaries. Whereas the other company has achieved 100 lakh rupees turnover, we have paid 28 crores or 25 lakhs rupees of the salaries. That means which is the best company? XYZ is paid less salaries, it is the best company. Now my doubt is, here the management may be created the fake employees and they paid and manipulated the amount. The possible misstatement here is, what is the possible misstatement? Maybe ghost employees, language given in the ICA material. Ghost employee means employee name is available in the payroll, but employee is not available in the company. Right? And contract employees not attending companies. Sometimes they will come, sometimes they will not come. Because they are not permanent employee, no, they are contract employees. Shall we proceed? So when the auditor comparing like this, auditor is able to get some data. Auditor is able to get some data. So based on this data, auditor is going to conclude the transactions, conclude the audit. Appreciate it. Now let us come to the now analytical procedures. Analytical procedures means evaluation of financial information through analysis of plausible relationship among financial and non-financial data. What relationship? Plausible. What is plausible means? What is it is not possible. It is plausible. P-L-A-U-S-I-B-L-E. Plausible. What is plausible? Relatable. Between what and what? Financial versus non-financial data. Sorry sir, we are not able to understand. We need an example. I will give the example. Everybody knows about this meaning. Now tell me the plausible relationship. Financial data, non-financial data. I will write the financial data, you tell me the non-financial data. I will give example, salaries 100 crores. Tell me non-financial data. Number of employees. Power charges 5 crores. Very good. Units consumed. Rent paid 500 lakhs or 5,000 rupees. Very good. Area or extent is non-financial. Now, for this particular room, can I pay rent of 5 lakh rupee? No, not required, because extent is very less. Okay, so like this, we are going to create a relationship between financial versus non-financial data, so that easily we can identify the possibility of material misstatements here. Example, there is only 4 employees working in the company. They booked 50 crore salary. How it is possible? Immediately auditor says that, sir, what, for 4 employees you are booking 50 crores, how it is possible, sir? auditor is able to capture this point because of the comparing financial versus non-financial data. Shall we proceed? No. Analytical procedures also encompass investigation as necessary of identified fluctuations. What is the meaning of fluctuation? Percentage of variation that exists inconsistent with other relevant information. What is the meaning of inconsistent? It is not reliable information. It is not matching information. It is not consistent with the organizational revenues. In such cases, the difference may be very, very significant amount. So, how to achieve this? How to do analytical procedures? Auditor can apply the following analytical procedures as far as the company is concerned. Very, very easy, very, very simple. Every point, comparison, 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 comparison. That means I have two parameters. I am comparing one parameter with some other parameter. I am going to get difference. If difference is significant amount, I am going to go further information, go for further explanation, go for further clarification from the management. If the significance is not there, very meager difference, I will ignore. In order to get the difference, what I have to do? Compare. Whose data versus whose data? Now let us see that. My client data is one parameter with the same industry data. My client data with the previous year of my client data. My client data with the client budgeted or expected results. Client may be preparing budgets, but what is the actual versus budget? Why you are not achieved this? That means budgets, everything prepared, no? Where is the internal control system in your company? And for the same company, I may be having some expectation in my mind, but company is achieved something else. Client data versus auditor expectations. Because I have my own experience, how the company is going to generate the profits, how the company is going to generate the revenue, how the company is going to perform, but you are not performed well as per my knowledge. Non-financial data versus financial data. So these are the 5 types with which auditor can do what procedures? Analytical procedures. So client data versus industry data, client data versus same client with the previous year data. So client data versus budgeted information, client data versus audited information, client data versus financial versus non-financial data. Shall we proceed now? Let us take an example. Beautiful examples as given here. Example number 1. Mr. Raj is the auditor of XYZ Limited company. He is analyzing. What does it mean analyzing? Comparing financial statements of the company by studying significant ratios. He is studying the significant ratios and comparing. Some of the ratios that the studied were gross profit ratio and net profit ratio. What ratios he has studied? Gross profit ratio and net profit ratio. The gross profit ratio for the 21-22 financial year is 19%. For the previous year it is 25%. What is the difference? 6%. Similarly, the net profit ratio for the 21-22 is 7%. Previous year it is 11%. What is the difference? 4%. Yes or no? No, it is 1%, 2% means it is okay. But significance difference is there. How auditor is able to find out the significant difference? Because of comparison. Who told the auditor to compare? 520 told. Who told the auditor to compare? 520. Shall we proceed? Now, in this example, I am comparing the client data with the same client data the previous year. This is one type of comparison. That means it is called as intra-firm comparison. Means what? Within the firm comparison. I am comparing the financial statements of my own company with the previous year. I am not comparing with any other persons. So I am able to get significant difference, 6%. So the result of this particular analysis is there is a large variation in the gross profit ratio and net profit ratios over the 2 years data. Hence, the auditor has a reason to believe that there may be something unusual in the company. What is the meaning of unusual? Possibility of misstatement. Why misstatement may happen? Because of the errors and frauds. Who can commit the fraud? Management may commit the fraud or employee may commit the fraud. Who has to identify, who has to rectify the fraud? Management only has to rectify, they have to identify the fraud. Who has to consider and report the fraud? Auditor has to consider and report the fraud. Shall we proceed? Now in this particular case, because we have 5 methods, right? In these 5 methods, let me erase this. So in these 5 methods, so now this is done, now completed. This is called as what? Intra. This is called as what? Inter, between two companies. Shall we proceed? Now come to example number 2. Comparison with auditors' expected results. Example, analytical procedures exhibits unusual ratios and trend. Example, unusually large transactions reported in the last month of the reporting period. That means auditor thought that I want to check only March month transaction because this is the last month in the particular financial year. If management want to book more expenses, more income, they may book in the particular month. So based on the auditor expectation, auditor check this, really management has booked all the expenses in March itself. Then auditor may be having reason to believe what? Material misstatements. Now let us go for examination questions. Question number 1. CA Amar wants to verify the payments made to the XYZ Limited company on account of building rent during the financial year 21-22. The rent amounts to 50,000 rupees per month for the year. The monthly rent payments are consistent with the rent agreement also. However, the other companies in the similar industry are paying rent of 10,000 per month for the same location. Super. Same location. Example, take Nungambakam. One organization is paying 10,000 rupees rent per month. Other are paying 50,000 rupees per month. What is the variation? What is the per annum effect? 4,80,000 rupees. Per month 40,000 difference means to 40,000 multiplied 12 is 4,80,000 rupees. So when you look at individual item 40,000, it may not be material. When you aggregate the individual items, it may be a material transaction. Now let us continue with the case. How will you apply the analytical procedures impact the verification process of such rental payments? Now what kind of activity I am going to apply out of the 5? Comparison of client data versus industry data. So as for my client, it is 10,000. As for industry in the same location, it is, sorry, as for my client, it is 50,000 rupees. As for industry data, it is only 10,000 rupees. Hence, auditor is going to apply the analytical procedures as a inter-firm comparison, and there is a substantial difference in this particular case, and CA Amar may not be able to find out the inconsistency in the rental payments. Rent is paying every month 50,000, 50,000, 50,000, 50,000. 50 into 12, 6 lakh rupees rent has been paid. Company also deducted TDS also. All compliances has been made. But rent is, when I compare, you are being caught. You are paying excess amount than required, because the building owner may be your related party, and you want to book more expenses in the company. Hence, being a statutory auditor, I don't agree for this. You give me information, explanation, clarification. If I satisfy with your information, explanation, clarification, I may agree for this. In this particular case, Amar applies analytical procedures. He will notice an inconsistency in such payment as other companies are paying the less monthly rent payment. However, if CA Amar does not make such comparison, if at all auditor is not making comparison, auditor feels that everything is pakka, everything is prompt, and everything is been paid within due date. Sufficient appropriate audit evidence has been satisfied. I am able to get reasonable assurance, but still audit is ending up with the wrong solution, because there is a fraud is involved here. Shall we proceed? So only checks on monthly payment and rent agreement XYZ, you would not have found such inconsistency. Such misstatements may remain undetected, which leads to risk of not detecting material misstatements and leads to audit risk. In yesterday class, we discussed about audit risk, risk of giving inappropriate opinion when the financial statements are materially misstated. Now the financial statements are misstated, it is also materially misstated. Why materially misstated? 40,000 rupees into 12 is equal to 4,80,000 rupees is a material transaction. Hence, it is a material misstatement. But because of the standard number 520, because of auditor is able to apply analytical procedures, auditor is able to find out this kind of comparisons. Otherwise, he may be missed out. Once he missed out, he may not found out such kind of inconsistencies. So if the auditor is not able to find out, it is a mistake of auditor only. Hence, auditor should apply 520 standard in all the audits. Now, standards in auditing applicable to all kinds of organizations. What is the meaning of all kinds of organizations? Profit oriented or non-profit oriented, irrespective of whether the organization is a profit oriented or not profit oriented, auditing standards applicable to all. The examination question may come. There is some NGO. The committee of the NGO is arguing with the auditor that standards in auditing not applicable for our NGO. Please comment. What is your answer? The argument of NGO is not acceptable, because whether it is NGO or a trust or a society or anyone, auditing standards applicable to all, irrespective of whether you are a profit making company or not profit making companies. Now question number 2. Analytical procedures involves analysis of the relationship among the financial versus non-financial data. Question itself has given the financial versus non-financial. Explain with the help of an example as to how the statutory auditor AVC Limited will analyze such relationship with respect to total wages paid. Now, what is the total wages law? What is the financial? What is not financial? Wages paid is financial. What is non-financial? Number of wages or number of wage seekers or number of employees is a non-financial. If you write this formula, you are going to get the full marks. If you write this formula, you are going to get the full marks. Now see here, total wages is equal to what? Wage per worker into total number of wages. What is total number of wages? Non-financial. Yes or no? Number is non-financial. What is the wage per worker? Example, let us take 50 rupees. Is a financial. So the answer is Always for each and every income, each and every expenses, always there is a combination of financial versus non-financial data. You take any transaction, sales, quantity sold into rate per unit, you are going to get the sales. Yes or no? Purchases, quantity purchased into rate per unit, you are going to get the amount. That means for each and every transaction, each and every line item, we are going to have financial versus non-financial data. Shall we proceed? Advertisement expenses, financial versus non-financial. What is non-financial? Square meters. That means how many letters? What is financial? Rate per square meter. No. Another example, comparison of the client data with a similar prior period data. CA Balaji, while verifying the travelling expenses of the PRT Limited company, may compare the travelling expenses of the current year amounting to 2.5 lakh rupees with the previous year travelling expenses of the company, where is 2 lakh rupees, and infer that there is an increase of 25% in the travelling expenses incurred by the company. Balaji may compare such percentage in increase with the trend and earlier several years. Example, he is comparing with the travelling expenses of the company versus industry. So, 1 year travelling expense is 2.5 lakh rupees, previous year travelling expense is 2 lakh rupees. So, 2.5 lakh rupees, 2 lakh rupees. What is the difference? 0.5 lakh. So, management has to give explanation for this 0.5 lakh rupees. Now, exactly similar lines, let us go for the another example. Comparison of client versus industry data. Just now we have seen the example already. Another example, one more example we are giving. Example 1920, gross margin is 22.5%. When I compare with the industry, 23.6. Do we have abnormal difference or nominal difference? Client achieved 22.5%, industry says 23.6%. Abnormal or minimal? What is the difference? 0. What is the difference between 22.5 and 23 point? 0 point or 1.1? 1.1. Abnormal or normal? Being auditor, you tell me. Gross margin, abnormal or normal? Normal only. Now 2021, 22.7, 22.2. Abnormal or normal? What is the difference? 0.5. Now compare both and tell me abnormal, normal. When I compare with 2021, I got 0.5 is the difference. When compared with 1920, I got 1.1 is the difference. So 1.1 is an abnormal compared to 0.5. So because of this 2-year comparison, I am able to find out this with the industries. So like this, auditor has to do the industry comparison also to identify the abnormal variations, to identify the possibility of material misstatements, to identify the fraud, to identify the error, in order to reduce the audit risk to minimum level. Next examination question. The statutory auditor of ABC Limited company, Mr. Raj, identified some differences while applying analytical procedures to the financial versus non-financial data. When Raj is performing the audit, he applied the analytical procedure. He found that there is a variation in the financial versus non-financial data. With reference to 520 on the analytical procedures, how CA Raj shall investigate such differences? So whenever you are going to get the difference, what you are going to do as auditor? When you get the difference, just you calculate the difference and report, or you are going to discuss with somebody? With whom you are going to discuss? Management you are going to discuss. That means in the particular case given, there is inconsistencies between financial versus non-financial data. What is the procedure auditor has to follow? Information, explanation, clarification. What is the meaning of information? Auditor should obtain sufficient appropriate audit evidence. Auditor should discuss with the management and get the proper explanation. Auditor should get the clarification by further investigation with the management. Now check the answer. Inquiry with the management, obtain appropriate evidence, perform audit procedures as necessary in the circumstances. That is called information, explanation, clarification. So whenever there is abnormal variations in the analytical procedures, auditor should inquire. What is the meaning of inquiry? Ask the question with the management. Inquiry means what? Asking a question to get the response. Ask the question, inquire with the management, get the response, then we can proceed. Why you are inquiring with the management? To get information. What kind of information you want? I want sufficient appropriate information only. Other information not useful for me. I want reliable information only. That's what the answer. Inquire and get the audit evidence relevant to management response. Perform the audit procedures as necessary in this case. What is audit procedures means? Inquiry, inspection, observation, reperformance, recalculation, external confirmation, analytical procedures. Whatever applicable in this case, you perform accordingly. So in the present case, CA Raj identified certain inconsistencies while applying the analytical procedures to financial and non-financial data. CA Raj should inquire the management and obtain sufficient appropriate audit evidences. Then Mr. Raj also perform other audit procedures if required in the circumstances of the case to obtain further sufficient appropriate audit evidence. Already one audit procedure I applied. What is the audit procedure? Inquiry. Already two applied. One is analytical procedure I applied, I got the difference. To get the explanation for the difference, I applied one more procedure. What is the procedure? Inquiry. In order to get the proper information explanation, I may obtain one more procedure also. That's what you see. Further, perform other audit procedures. That means you may go for the inspection of the documents. You may go for the observation also. As necessary, whatever it may be possible. Example, there is a variation in the stock. What you will do? You got the stock report. Right? You got the stock report from the management. You got the stock report from the accountant. Two persons given the stock report. Stock report itself has a variation. I compared both the reports. What you will do? First I will ask the management. Sir, why there is a difference? They given the explanation. I am not satisfied. What I will do now? What I will do? I will go and re-perform the stock verification. Why I am re-performing stock verification? Because there is a difference. Till my doubt is clarified, I am going to do the further audit procedures. Shall I proceed? Now listen very carefully. Audit procedure. One procedure I applied. If I don't satisfy, apply another procedure. If don't satisfy, apply another procedure. So second and third one is called as further audit procedures. First one is called as initial audit procedures. Example, first I applied analytical procedure. I got variation. Then what I have done? Further audit procedure. What is further audit procedure I followed in this case? Enquiry. I didn't get the proper explanation. Again I am going for another audit procedure. What is another audit procedure I may follow? I go for reperformance, recalculation, whatever the possible way I will go. If I don't get, if audit is unable, what will do? I applied, I am unable to get the information. What I will do? I will check material misstatement plus pervasive. Then I will go for disclaimer. Material misstatement but not pervasive, I will go for qualified. So with the 520 standard is over. Now standard number 530, market is very important for examination. Audit sampling. SA 530. Audit sampling. Now in order to understand this audit sampling, we need to understand some basic points. Shall we proceed? Now the first point to be noted is population is equal to entire set of transactions. Entire means 100%. So population is equal to 100% transactions. Tell me what is population? 100% transaction. Very, very important for examination. Unless you understand this terminology, it is very difficult to understand the standard. What is the meaning of population? Entire set of transactions. What is the meaning entire set? 100% transaction. Now population is equal to how much percentage? 100%. Population is equal to entire set of transactions. So population is equal to nothing but 100% transactions. Okay. No. Let me write, these are the transactions. Listen very carefully, very simple concept. So no need to make it complicated. So many students will leave this in choice, but we will try to simplify the standard as far as possible. Now we call it as a population. We call it as a population. Let us take example, two examples. Example number 2, example number 1. Are you writing running notes or not? Running notes is very important to understand the auditing concepts. Shall we proceed? Now population, example number 1, example number 2. Now A and Co is the auditors. Let us take for this A and company is auditors. Let us take it is a ABC limited company. This is XYZ limited company. For this B and company is the auditors. Okay. Shall I proceed? Sample means sample is equal to applying audit procedures to less than 100% data. What is audit sample means? Applying audit procedures. What is audit procedures? 7. Inquiry, inspection, observation, recalculation, reperformance, external confirmation, analytical procedures. To less than 100% data. So what is the sample means? Applying audit procedures to what? 100% or less than 100%? Less than 100%, then only it is sample. If I am applying for 100% transaction, it is complete audit or 100% audit. Now tell me, my dear friends, in case of the company which is having a large volume of transactions or huge volume of transactions, is it possible for the auditor to verify 100% transactions or not? Why? Inherent limitations of audit. What is inherent limitation of audit? We have told the last point. Time constraint. Because there is a 1 lakh transactions in a company. 1 lakh transactions I cannot complete. Because there may be duplication of the sales means sale entry means all sale entries same invoice only. Amounts may be different. Parties may be different. Yes or no? So regarding sales invoice, if I check the internal control system of the company, that is more than sufficient. There may be a 10,000 debtors. It is not possible for me to send the confirmation letter to all 10,000 debtors. I may send to 1,000 debtors, 2,000 debtors. Yes or no? Now, what is the meaning of less than 100%? Maybe 80%, maybe 90%, maybe 20%, maybe 10%, maybe 5%. What is the meaning of less than 100% means? What is less than 100%? Not 100%. Then what might be less than 100%? Maybe 95 also. Now tell me, think and tell me, when there is a more possibility of risk, you will check more transactions, less transactions. So that is the answer. When risk is more, I am going to check the more transactions. When risk is less, what is the risk? Risk of material misstatements. So these running notes may not be available in your book. So please write down the running notes. So because it will give conceptual clarity. When risk is more, risk of material misstatement is more, I am going to test higher percentage. When the risk of material misstatement is less, I may test lower percentage. Because why lower percentage? When there is no risk at all, why should I check, sir? Now, for example, there is a 10,000 employees are working. Every month we may be making some payment to the employee, salary payments. Every month 10,000 transactions, 10,000 employees. Per annum 1,20,000 transactions. Is it required to verify all 1,20,000 transactions? I will give less preference here. If there is a substantial difference in the employee salaries, I go for higher percentage. Are able to understand or not? So now what is the meaning of sample? Applying the audit procedures to less than 100% transaction. What is the meaning of less than 100%? It may be 95, 85, 80, 10, 5, 1% also. But when I am verifying more transactions, what it means? There is a more risk. When I am verifying less transactions, what it means? There is a less risk. Now, what is the meaning of population? What is the meaning of population? Entire set of transactions, financial transactions, entire set of data. Shall we proceed? Now tell me in this example how to pick the samples. Assume a scenario, this is the entire set of transactions. Now tell me how to pick the samples. Now look here. I may take samples from this area, only from this particular area. I may take samples from this particular area. I may take samples from only this particular area. I may take samples from this area. I may take samples from this particular area. That means I can take samples from here, 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 but not all. Now let us take another example. Another auditor may do sampling as follows. Take some samples here, some samples here, some samples here. Easy, no? Some other auditor may do like this. Take samples here, here also, here also, here also. I want to reduce my risk as much as possible. So entire set of data will be segregated by the auditor based on the risk of material misstatements. When there is a more risk, auditor may check more percentage of transactions. Less risk, auditor may check less percentage of transactions. Shall we proceed? We will take a break and we will continue the session. Now let us continue with the audit sampling. So after given the examples and after given the meaning for the population, then what is the meaning of sampling? Now let us go for the main concept. Now MCQ based question. First MCQ based question. Meaning of audit sampling. So audit sampling means we are going to apply the audit procedures to 100% or less than 100%. Less than 100%. So according to 530, audit sampling means application of audit procedures to less than 100% of the items within the population. What is the meaning of population? Total transactions. So out of the total transactions, auditor is not going to test 100% transactions. He is going to test less than 100% transactions, such that all sampling units have equal chance of selection. Example, I am verifying the salaries. There are 100 transactions. If I verify 10 transactions out of it, it means I verified 100 transactions, because all are same related transactions only. Now, this is to ensure that items selected represented to entire population, which enables the auditor to draw opinion and express opinion on the predetermined objective. So which means when the auditor is selecting the samples, even he is verified less than 100% transactions, there should be equal chance of selection of all transactions. Like example, we given salaries. Now we need to understand the approaches of the audit sampling. So there are two approaches for the sampling. Another important question for examination. Here first examination question is, so when the audit procedures are applied to population less than 100%, we call it as a sampling. Examination question. Then sampling approaches, how to take the samples. There are two approaches for the sampling. One is statistical sampling, other one is non-statistical sampling. Simple, remember for examination. Statistical means statistical formulas, mathematical formulas, then using some programs. Non-statistical means without mathematics and without statistics. Shall we? Now let us see the statistical sampling. So statistical means auditor is going to select the samples how? Using mathematical formulas, using statistical formulas. Now statistical sampling, audit testing done through this approach is more scientific than testing based on entirely on the auditor's own judgment, because statistical sampling involves use of mathematical laws and probability theories. Okay. So statistical sampling, auditor is going to use what? Probability theory, random number tables, mathematical formula, statistical approach. Sir, if auditor don't use all these things, I am very expert in the particular pharmaceutical company, I know where there are going to be samples, where to pick the samples, and in which month I have to pick the samples, then it is called as non-statistical sampling. That means if auditor use his own personal experience, this is called as non-statistical. If auditor uses the mathematical formulas, random number tables, then it is called as statistical. Shall we proceed? Now see non-statistical sampling. Under this approach, sample size is a composition determined on the basis of personal experience and knowledge of the auditor. True or false questions, very, very important for examination. If auditor selected the samples based on his personal experience, it is called as non-statistical sampling. If auditor selected the samples based on mathematical formulas, probability theories, statistical approach, then statistical sampling. Shall we proceed? Then sampling risk versus non-sampling risk. Very easy to understand. Let us give the example. sampling risk, non-sampling risk. Very easy to understand, very easy to understand, very easy to understand. Now listen, shall we proceed? Any risk happened due to samples is called as sampling risk. Due to samples is called as sampling risk. Any risk happened other than samples is called as non-sampling risk. Sir, please give the example, sir. We don't understand this. Example, I used the non-statistical sampling. I use the sampling or not? So, I verified 60% of transactions based on my personal experience. 40% it is deemed that I have verified. Actual verification is how much? Let me write here in a table format. Actual verified 60%, deemed that I have verified 40%. Whatever 60% I verified, there is no issue. Whatever the verification not done, that is deemed verification, there is a material misstatement, where auditor has not verified it, but he is deemed that it has been verified because of the samples. Now, because auditor is ignored this, now tell me, if at all I have done 100% of the verification, instead of applying samples, if I verified 60 and 40, I might be found this material misstatement, right? Yes or no? Because I verified only 60% and 40% has assumed that I verified, there is a material misstatement in this. Because of the samples, that is a risk, hence it is called as sampling risk. Shall we proceed? Non-sampling risk. I have verified 80% of the transactions as per my plan, but due to inefficient staff, not because of samples, because of the inefficient staff, they could not able to identify the material misstatements. They could not able to identify it is called as what? Non-sampling risk. So, one line summary of entire discussion. If risk happened due to samples, it is called as sampling risk. If risk happened other than samples, it is called as non-sampling risk. So, we have seen the approaches for sampling: statistical approach, non-statistical approach. We have seen the risk, two types of risk: sampling risk, non-sampling risk. Shall we proceed? Now, let us see. Now, sampling risk. Sampling risk is going to happen because of what? Sampling risk happened because of the samples. The risk auditor conclusion based on the samples may be different from the conclusion if the entire population were subject to same audit procedures. Just now we have seen, I have taken 60% samples, 40% deemed. If I have taken 100% of the verification, I might be found that material misstatements. Yes or no? Because of the samples, I could not able to find out the material misstatements. Hence, such kind of risks are called as sampling risks. Now, sample risk can be lead to two types of erroneous conclusions. Very simple to understand. See the presentation, you can understand in a clear manner. Now, let us take only conclusion number 1. Don't look at the conclusion number 2. Conclusion means what? Final opinion. So, in the day 1 class, we discussed that management is responsible for what? Preparation of financial statements. Then, second point, installing, maintaining internal controls also. Now auditor should check how many areas now? Financial transactions also you should check, internal controls also you should check. Shall we proceed? Now, I am checking test of controls. I am checking test of controls. Example, there is 100 controls in the company. I have checked only 10 controls. When I check the 10 controls, it looks like all are effectively working. 10 controls are pakka. As designed, they are working. What I will assume? Okay. When I check 10 controls, all 10 controls are working properly, means other controls also may be working properly. That's what my blind conclusion about the controls. But whereas, forget about whatever we have done so far. If you check the whole controls, it is not effective. If you go on sample basis, it is working effectively. If you go for 100% transaction of 100% of the controls, you are checking 11th control, 12th control, 13th up to 100 you are verified. There are 5-10 controls which are not working properly. That means what is the conclusion here? On test basis, my conclusion is effectively working. On 100% basis, my conclusion is not effectively working. Shall we proceed? Test of details. That means transactions I am verifying, purchase for transactions, sales transactions, expenses transactions, assets, everything. On test basis I checked, all are effective. I got all the evidences, I got the information, I got the explanation, everything. When I go for 100% checking, there are some areas where management could not able to answer for my questions. That means when I go for 100% transaction, it is not effective. Shall we proceed? And vice versa. If you go for test basis, it may not be effective. If you go for 100% checking, it may be effective. I checked only 1 or 2 controls, 1 or 2 controls flap, 98 controls working properly, but I have not checked 98 controls. I have checked only 2 controls, 2 controls are not working properly. What I will assume? All controls are not working properly, I have given the not effective, so that I have given the opinion. But management has asked me to do all controls verification. I verified all the controls. Out of 100 controls, 98 are working. Is my opinion correct or wrong? Wrong. Based on 2 controls, based on test basis, based on samples, I given my opinion. No sir, 2 controls are not working sir. I assume that all entire controls are not working. But whereas if you go for the 100% checking, it is working effectively. Shall we proceed? Exactly similar lines. When I check the few transactions in a company, management is said, sir, we will provide later on, sir, 1 or 2 transactions like that. Immediately I said not effective, I go for the disclaimer of opinion. But when I go for verification of 100% transactions, I got the answer for 98 transactions. Which means what? Effectively management used preparing everything. That means my erroneous conclusion is, if I test something on a sample basis, my conclusion may be different. If I test on 100% basis, my conclusion may be different. If I test on sample basis of the controls, my opinion may be different. If I go for 100% of the transaction, my opinion may be different. If the opinion is not the same because of the samples, we call it as a sampling risk. Shall we proceed? Now tell me, conclusion number 1. On test basis also effective. I verified 100%, 100% also effective. Test basis also effective, 100% transaction also effective. What is the risk? 0. Okay. Test basis not effective and 100% also not effective. What is the risk? Because there is no risk, because if I check 100% same result, test basis also same result. If results are different, then it leads to what risk? Sample risk. Why? Because of the samples. Shall we proceed? Non-sampling risk means not because of the samples, because of the inefficient staff, because of the wrong audit plan I prepared, I end up with the risk. It leads to non-sampling risk. Example, human mistakes, that means inefficient staff, misinterpreting the sampling results like that. Counting mistake audit staff has done. It is not because of sample, because of the inefficiency of the staff. Now, the risk the auditor reaches the erroneous conclusion, any reason not relating to samples, is called as non-sampling risk. Shall we proceed? One line summary of entire discussion. If any risk of material misstatement happened because of the samples, we call it as a sampling risk. If any risk of material misstatements happened other than samples, we call it as non-sampling risk. Sir, how to pick the sample, sir? You told two approaches are there. You told two different types of risks are there. How many methods are there? Institute has given 5 methods, out of which random sampling is very important for examination. Please write down all the 5 methods. Sample selection methods. What methods? How to select the samples. How to select the samples. We have how many methods? 5 methods. We have 5 methods of selecting samples. Number 1, random sampling method. Number 2, systematic sampling method. Number 3, monitor unit sampling method. Haphazard sampling method. Block sampling method. The names are giving some little bit of information about sampling. Block, one block of transactions I am going to take as a sample. Haphazard, that means without applying of my mind, just randomly picking up the some samples without any conclusion. Just go and pick the sample, that's all. So, monitor unit, based on the money value I am going to pick the samples. Systematic sampling, I am going to use the systems. Interval sampling I am going to follow. Then random sampling we are going to further segregate as follows. Now, important for examination. Random sampling can be classified as a 2 categories. One is simple random sampling, second one is stratified sampling. Very, very important for examination. Very, very important for examination. Now, to understand this, we need to understand about some terminologies. What is the meaning of homogeneous transaction? What is the meaning of heterogeneous transactions? Now, tell me, for the purpose of samples, transactions can be classified as homogeneous, heterogeneous. Now, what is the meaning of homogeneous? Same kind of transactions. What is the meaning of heterogeneous? Different kind of transactions. Examples. Sales, April month. Sales, May month. Sales, June month. All are homogeneous, heterogeneous. Homogeneous. Why? Sale, sale, sale. Heterogeneous. Sales, purchases, salaries, incomes, etc. All are same or different? Different. We call it as what? Heterogeneous transactions. Shall we proceed? Now, while applying these sampling methods, we have 5 methods, right? The method will give the conclusion. For what kind of transactions you should apply this method? That's what important for examination. We have 5 methods, right? Random number, systematic, monetary unit sampling, block, haphazard sampling. Right? So we are going to apply these sampling for what? Transactions, means population. All the transactions in the population must be homogeneous or maybe heterogeneous. Okay. If you look at the profit and loss account balance sheet put together completely homogeneous, heterogeneous, all mixing, heterogeneous. Because profit and loss account have different kinds of transactions, balance sheet have different types of assets and liabilities. Yes or no? You take profit and loss account, only sales, all transactions, homogeneous. Go to balance sheet, take only debtors. Go to balance sheet, take only creditors. You got the point? So based on this, I am going to apply the samples. Shall we? The examination question may come like this. They give the scenario, they give the same kind of transactions, they may ask what kind of sampling method is useful here. Now let us go for the random sampling. Random sampling can be classified into further classification of simple random number sampling, stratified sampling. Simple random number sampling, stratified sampling. Now, simple random number sampling. Under this method, each unit of the whole population, what is the meaning of unit? Maybe purchases is 1 unit, sales 1 unit. Okay, that means one item in the financial statements is called unit. Shall we proceed? So, simple random sampling, whole population, that means 100% of the population has an equal chance of being selected. It is considered that random number tables are simple and easy to use and also provide assurance that auditor bias does not affect the selection. So, one line summary, in simple random number sampling, auditor is going to use the random number tables. Auditor is going to use random number table. It is a computer application, it is a software given here. So, today random numbers are also generated using various applications like cell phones, like random number generator, etc. Example, for that software I will give some 1 lakh transactions. Okay, it will randomly pick and it will give some 10 transactions. Yes or no? No. Example, the population can be considered homogeneous if say the trade receivable balances falls within the range of 55,000 to 2,25,000 or not in the range of 525 to 10,50,000 rupees. Now it is giving random number table. So whatever the trade receivable balance within the 55,000 to 2,25,000, I want to pick the samples. There may be a lower amount of trade receivable 525, higher amount of the trade receivable 10,50,000. But I don't want samples about that. I want samples in this between particular range 55,000 to 2,25,000 rupees. That means 525 rupees to 55,000 rupees I don't want to verify. I want to leave it. About 2,25,000 rupees I don't want to verify. I want to leave it. Means above 2,25,000 I am not going to apply samples, I am going to do 100% verification. Because why? High value, high chance of risk. I will apply. Now, simple random number table, very easy to understand. If auditor applied random number table to pick the samples, it is called simple random number tables. Now come to stratified sampling. Now read the example once again. We go for stratified sampling. In the first example, simple random number sampling, what is the example? Auditor want to pick up the sample 55,000 to 2,25,000. But debtors are starting from 525 to 10,50,000 rupees. But auditor is ignoring what? Above 2,25,000 auditor is ignoring. Below 55,000 auditor is ignoring. Now what happened? Because of this weakness, because of this issue, because of this problem, they found another method called as stratified sampling. What is this? Stratified sampling. Now listen. When entire population has been divided into strata, 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 this division of strata is called stratification. Dividing entire population into individual groups is called as stratification. Now in our example, data starting from which 525 rupees to 10 lakh 80,000 or 85,000? 10 lakh 50,000 rupees. Okay. Now I am going to divide this entire amount 525 rupees to 10 lakh 50,000 into various groups now. The division of the population into groups is called as what? The group is called as strata and the entire process is called stratification. Stratification means what? Strata plus strata plus strata plus strata plus is equal to stratification. What is the meaning of strata? Part of the population. Now I am going to apply. See, in the random number sampling, what I have done? I applied the sampling directly to population. Yes or no? In stratification, in the stratified sampling, I am not going to apply the sampling to the population. I am going to apply the samples to the each and every strata. So that in the first samples, whatever the problem I am facing, here that problem can be minimized. In the first, what happened? 55,000 to 2,25,000, I am able to pick up the samples. Now because of this stratification, what is going to happen? Look at the example. You can understand it easily. Now see this example. First see the example, then we come to the explanation. Trade receivable balances may be divided into the 4 groups as follows. What is the meaning of division of the population to group is called as what? Strata. How I can divide? Balance in excess of 10 lakhs. 775 to 10 lakhs. 550 to 775. 225 to 550. Below 225. Now what I am going to do? I am going to pick up the samples from here. I am going to pick up the samples from here. I am going to pick up the samples from here. I am going to pick up the samples from here. I am going to pick up the samples from here. Because the reason is I have already stratified the population. Now tell me, applying your intelligent mind, auditor should focus more on 2,25,000 or 10 lakhs. Now tell me the percentages. Above 10 lakhs, what is the maximum amount of debtors given? 10 lakh 50,000. Now tell me, what should I do for above 10 lakhs? That means tell me in the form of percentage. Very good. I will check 100%. Because higher amount, if something gone wrong, everything has gone wrong. Then 775 to here, I can check 80%. 20% leave it. Then come to 5 lakh 775, I may check 70%, 30% I will leave it. Then come 225 50, I will check 50%, 50% leave it. 225 I will check 5%, 95% leave it. So I am going to check only 100% of the transactions for the higher value transactions. Then I will reduce my sample size. Again I will reduce my sample size. Again I will reduce my sample size because the values are very meager. So that I can reduce my risk also. So this process is called as what? Stratified sampling. Very, 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 very important for examination. Now it already is given. Shall we proceed? But I have divided the stratas from where? Population. Population consists of various kinds of transactions or only one kind of transaction? What should I do first? That heterogeneous should be converted into homogeneous. From that homogeneous I should take the stratas. This is what examination question. For the heterogeneous transactions I cannot apply strata. Stratification can be done only for the homogeneous transactions. Very, very important for examination. Now here it is given, from the above group the auditor may pick up the different percentage of items to each of the group. From the group balances 10 lakhs and above, auditor may examine all the items, means what? 100%. Second group 25%, third group 10%, fourth group 2%, like that. Because low value, low percentage. Higher the value, higher the percentage. Shall we? So from the entire population, what should I do first? Convert the heterogeneous into homogeneous. From the homogeneous, stratify the data. From the stratification, strata separate groups will come. From that group, apply the sampling procedure. Shall we? Now, points to be noted for examination. Stratified sampling is used when the population is diversified. That means heterogeneous. What I am going to do with heterogeneous? Convert into homogeneous transaction, similar transaction, then apply the sampling procedures. Stratification means dividing the heterogeneous into homogeneous. Examination question, many times tested. Stratification means what? Converting heterogeneous to homogeneous, homogeneous heterogeneous. Examination question. Please remember. Now from that strata I am going to do what? I am going to draw the samples from the subpopulation. That means strata. We have seen in the example here. So this is one strata, this is one strata, this is one strata, this is one strata, one strata. Shall we? Now let me draw one more diagram for you. So first population, it is heterogeneous data. From that population, convert into homogeneous. From these homogeneous, stratas. Strata 1. Strata means not group, subgroup. Strata 2, strata 3, strata 4, strata 5, subgroup, 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 subgroup. From this subgroup, what I am going to do? Percentage of sample. 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 This entire process is called as what? Stratification. Done? Good. Now come here. So with this, first sampling is over. Random number sampling. So random number sampling can be divided into how many types? 2 types. Simple random number sampling, stratified random number sampling. So you have seen the stratification, everything process. Then come to systematic or interval sampling. Interval sampling or systematic sampling means systematic selection is selection method in which number of sampling units in the population divided by the sample size. Earlier we have done heterogeneous to homogeneous, then homogeneous to strata, everything we have done for the stratification purpose. But in this particular case, they are having some sample size. With that sample size, they are going to divide entire population. Example, they given. For example, 50. How 50 is arrived? Based on the professional judgment of auditor. There is no hard and fast rules for 50. It may be 30 also, it may be 20 also, it may be 70 also. Okay. And having determined a starting point with the first 50, each 50th sampling unit thereafter is selected. That means 50 is my base point. So 50, 100 transaction, 150th transaction, 200 transaction, 250th transaction, then 300 transaction, 350th transaction, 400 transaction, 450 transaction, like that. I am giving the gap, interval, go for next transaction, interval, go for next transaction, interval, go for next. Interval means break. Yes or no? So I am break this transaction. Example, my sampling size is 50. For each and every 50th transaction I am checking. If I give the interval like that, it is called as interval sampling or systematic sampling. I am systematically taking samples 50, 100, 150, 200. If it is 30 means 30, 60, 90, 120, 150, like that. If it is 40 means 40, 80, 120, 160, like that. In between I am leaving the, ignoring the transactions, I am taking only these transactions. Shall we proceed? So they given here example, let us take the example. If in a population of branch sales, particular branch sales only every 100 item and the sampling interval selected is 100. Now tell me, my sampling size is 100. So tell me how I am going to take the samples in case of interval sampling. 100, 200, 300, 400, like that. What is the reason for this? It is going to take in case of the 7 into 24 businesses. The example is given. If the accountant A is responsible to record all transactions in a month of particular month, example, accountant A is responsible in April. Accountant B is for next month, May. If this structure is the same throughout the year, A and B are two are the accountants. A is responsible for 1 month, April, then shifted to some other place, B will come. He will shift to some other post, again A will come. Okay. So A for April month, B for May month. Again A for June month, B for July month. Now, if I go for the systematic sampling, all the months will be covered or not covered? Will be covered or not covered? If I pick up like month wise, only April, I am ignoring B, and only June month, again I am ignoring July. That means one accountant will escape here. So in this particular case, I am going to use the interval sampling. In case of interval sampling, I am going to check the A transaction, I am going to check the B transactions also. I am not leaving any of the transactions. What is given? And the auditor determines as his sample to check every transaction of the alternative months. In case auditor decided to go for alternative month checking, example, you wanted to check April, then June, then August, like that, then what is going to happen? Only one accountant work is checked by the auditor, either A or B, depending upon the month what is selected. The work is overlooked and there could be a possibility of material misstatement in the transactions recorded by another accountant. If I want to cover accountant A and accountant B, then I have to follow interval sampling method, so that all transactions will be covered throughout the year. Monetary unit sampling based on the amount. Example, 5,000 to 10,000, 50,000 to 1 lakh. Account receivable. Already we have seen example in the previous sampling method. Stratified sampling, we have seen example. This is monetary unit sampling also, because I am dividing the samples based on value. High the value, high the percentage of selection. Low the value, low the percentage selection. But why it is called stratified? Because they converted heterogeneous to homogeneous. But in case of monetary unit sampling, there is no conversion. Straight away I am telling to my article student or audit assistant, please look into the following transactions wherever the transaction value exceeds 1 lakh rupees. All sales purchases above 1 lakh rupees. So if I take that monetary value, then it is called monetary value sampling. That's what account receivable balance, madam. Account receivable balance already we have taken here. Example, account receivables highest value is 50 crores. What you are going to do? Because the 50 crore rupees, if I check only above 40 crore rupees, less than 40 crores will be ignored. So I am going to divide monetary value basis. So 1 crore to 10 crores, 10 crores to 25 crores, 25 crore to 40 crores, like that. But all are account balances. So that I am going to apply this. In case of entire population, how to pick the stratification? It is not possible for, because entire population is heterogeneous. In that case, I am going to convert into homogeneous. Then again I am going to convert into the stratas. Then I am going to take the samples. So like that, they already the example is given here also. So account receivable balances. So you can write down, check point number 1. Stratified sampling example. Fourth point, very easy for examination. Haphazard sampling. No method is followed. No method is followed. Example, Mr. A is the auditor. He is asking April month selection, April month 1st, March month 31st. Sample over. Other auditor will come on June 30th, September 30th, December 30th, then January 31st. No quarter base. June 30th, September 30th, December 31st, January 31st. It is not a quarter wise also. First 3 times quarter wise, fourth is not a quarter wise. That means auditor is selecting the samples in whatever the way he want. No structure, no mathematical formulas, no sampling methods, nothing. Completely based on my experience. It is called as haphazard sampling. So if any samples are picked based on the experience of the auditor, is called haphazard sampling. Do the haphazard sampling have a structure? No structure. Is it a scientific method? No scientific method. Is auditor is going to use the random number table? No random number table. Mathematical formulas? Nothing. Why? Haphazard sampling is based on professional judgment of auditor. What is the meaning of professional judgment of auditor? Experience of auditor. Shall we proceed? No. Look. Haphazard selection is a selection without following a structured technique. If you follow a structured technique, what will happen? It will become random number table sampling might be. So without following any structure, just like that you are picking the samples. So no structure is used. Auditor would not less avoid any conscious bias and predictability. For example, is given haphazard selection is not appropriate when using statistical sampling. What is statistical sampling? Using statistical formulas, mathematical formulas and all. When you want to use the mathematical formulas, use the mathematical formulas. Don't mix your personal experience and mathematical ones both. Haphazard sampling is not appropriate when you are using statistical sampling. So nothing but haphazard sampling is what? Very good, non-statistical sampling. Note as given. Haphazard sampling do have structure or no structure? No structure. Now it does not involve any judgment also. Does not even use the random number tables also. Like mentally he is going to pick the samples. Shall we proceed? So is it a better method, not a better method? Haphazard sampling is appropriate or not appropriate? Not appropriate method. No. Block sampling. So block sampling means this method involves selection of a block or a blocks in a continuous items from the within the population. Block selection cannot ordinarily be used in the audit sampling because most of the population, or that means most of the transactions are structured transactions. That items in a sequence can be expected to have similar characteristics. What does it mean similar characteristics? Homogeneous characteristics to each other, but different characteristics from items elsewhere in the population. It may look like the same transaction. All assets are not homogeneous. Again, assets may have heterogeneous. Fixed asset is different from the current asset. Debtors are different from the loans receivable balances, like that. So in this case, what is going to happen? So auditor is going to pick up the take first 200 sales invoice from the sales day book in the month of September. He selected block. What is the block? In September month, 200 invoices has been taken. This is one block. Again, he go for October month, he will select another 200 invoices. One more block. Alternatively, if this is not going to work out, take any 4 block of 50 sale invoices. Don't take entire 200 invoices or 200 invoices from the September. Take first day of September 50 invoices, 5th day of September 50 invoices, 20th September 50 invoices, then last day of September 50 invoices. The 50 is a block. Block means a set of transactions. Set of transactions. So if I take 200 invoices from the September month, is a 200 invoice alone is a block. I am going to verify only 200 invoices, just my samples are over. September month transactions are 1 lakh transactions. Example. Out of 1 lakh, how many I am going to check? That to what first? First 200 sales invoices, not the last 200 sales invoices. Okay. If I take first 200 sales invoices, there may be a possibility for material misstatements in the last 200 sales invoices. So to avoid this, what I can do alternatively? First 50, mid 50, in between 50, end 50. So that risk can be minimized. But 50 is a block. Again 50 is a block, but not continuously. I can take the block wherever I want. So this is called block sampling. So important point to be noted for examination. What is the meaning of stratification? The process of dividing population into subpopulation, each of which is group is having a sampling units which have a similar or different. Similar means what? Homogeneous transactions. First 200. Alternative. Yes. If in the example, if I take first 200 invoices, that means I am ignoring the rest of the invoices. Right. So alternative, what I can do? I can go for 50, first 50, then I can give some gap, then go for the another 50, then I can go for another 50, but I am not taking 50th, 50th, 50th transaction. It will become interval sampling. I am taking total 1 to 50, then maybe 150 to 200, then maybe 250 to 300, then maybe 500 to 550, like that. I am taking total 50 transactions, not 50th transaction. Then risk can be minimized. If I take only first 200, then rest of the thing is ignoring. If I take last 200, then first transaction is ignoring. That should not be happened here. Now listen. I am doing audit for one company. So very important for examination. Last points in the sampling approach. So I decided in this company, any fraud or error up to 500 rupees I will ignore. Any error or fraud, that means negligible amount, up to 500 rupees I will ignore. That means I can bear this error. I will give the clean report. There is a 10,000 crore company. For a 10,000 crore company, any error or fraud, either individual or aggregate, up to 500 rupees I will ignore. That means I will tolerate. Who will tolerate? Auditor will tolerate. That means what is the meaning of tolerate? Accept. Right. If anything is more than 50, example, I have set amount 500. Now look at here. Now I found 100 rupees mistake. Tolerable or not tolerable? What is my set? 500. Okay, I set the 500 rupees as a tolerable misstatement. So any misstatement up to 500 rupees I will tolerate. So this is what my level. Then I found 150 rupees. What is total cumulative amount? Within the tolerable limit or beyond the tolerable limit? What is my limit? So what is the cumulative amount? I got another 200 rupees. What is the cumulative amount? 250 plus 200, 450. I got another 20 rupees. What is the cumulative amount? 470. 450 plus 20 rupees. Is it within the tolerable limit or above the tolerable limit? Shall we proceed? I got another 100 rupees. What is the meaning? What is the cumulative amount? 570. So up to this I can tolerate. Beyond this I can't tolerate. Shall we proceed? Now read this point. Tolerable misstatement. Tolerable. There is a misstatement in the financial statement or not? But what is the amount set by auditor in the example? Is a tolerable misstatement exceeded 500 or not exceeded 500? If exceeded 500, it is not a tolerable misstatement. I will report. If it is within the limit, it is a tolerable misstatement. Now see, a monetary amount set by whom? Auditor, in respect of which auditor seeks to obtain appropriate level of assurance. That monetary amount set by auditor is not exceeded by the actual misstatement in the population. What is the actual misstatement in our example? We have taken two scenarios. So let us ignore this. Now tell me, what is the actual rate of toleration in your example? 470. Within the tolerable limit or beyond the tolerable limit? Within the tolerable limit, 470, right? So this is called as what? Tolerable misstatement. Now if you go beyond, example, I got another 200 rupees. What is the total amount, cumulative amount? 470 plus 200, 670. This is called as what? Non-tolerable. Okay, shall we proceed? Now here is it amount. If it is in the case of percentage, we call it as a tolerable rate of deviation. If it is amount, we call it as tolerable misstatement. If it is a percentage, we call it as tolerable rate of deviation. Who is going to set the percentage? Auditor. If the percentage is exceeded the actual percentage, then it is not tolerable. If the percentage within the amount percentage fixed by auditor, then it is tolerable. Now let us take the example. My percentage is 1.2%. Fixed by whom? Fixed by auditor. Okay. So scenario number 1. I got 0.9 percentage. Total deviation I got. This deviation is called as what? Why tolerable? What is my set amount? Sorry, set percentage 1.2. What is the percentage I got? 0.9 percentage. So 0.9% within the tolerable limit or beyond the tolerable limit? Within the tolerable limit. It is called as what? Tolerable rate of deviation. Scenario number 2. So we got the deviation amount 1.5 percentage. This is called as what? Non-tolerable rate of deviation. Done? Now come here. Now see here. Tolerable rate of deviation. A rate of deviation, what is the meaning of rate of deviation? Percentage of deviation. Rate of deviation means percentage of deviation from prescribed internal control procedure set by auditor. Sir, in your company, whatever the deviation up to so and so percentage, I will agree, sir. Beyond that, I can't agree, sir. I will go and rip. In respect of which auditor seeks to obtain appropriate level of assurance that the rate of deviation set by the auditor not exceeded by the actual rate of deviation in the population. If it is not exceeded, we call it as tolerable. If it exceeded, it is called as non-tolerable. Now listen, sir. Tolerable misstatement. Now tell me, 470 is what? 670 is what? I got only 1 rupee difference. What it called? Now tell me, tolerable, non-tolerable? 1 rupee I got the difference. It is within the 500 rupees only, no? Tolerable. 1 rupee. Very good. Negligible. Come here. I got the 0.0001% difference. what it called? Tell me it is in the form of percentage. Tell me it is in the form of percentage. 0.00001. Can you tell like that? Tell me it in the form of difference, or else 0.20 paise. Can you tell? No, read this. Important for examination. Anomaly. Anomaly. What is the meaning of anomaly? Anomaly may be defined as misstatement or deviation that is demonstrably not representative of misstatement or deviation in the population. It is not representative. I cannot represent it. Market is important for examination. So without example you cannot understand this. So better to have example for this. Done. Now 2 questions are given, examination questions. Please go through with the questions. We will continue in next class. Thank you for patience listening. So tomorrow we will continue. Thank you.